Good morning. Welcome to riskneutraltrading.com, incorporated, amalgamated, whatever. Welcome to Risk Neutral Trading. This is my virtual trading journal. And here we are, alive and direct. Hope everything's working okay. Seems like it is. It's important to say here at the moment that at the beginning, the outset, that obviously trading can be risky, and I am not licensed to give financial or trade advice. This is my virtual trading journal, and I allow and invite anyone to, look over my shoulder. I trade live. This is a live futures trading account funded by me. And I take live trades here, and I take no trades off the stream. So this is completely transparent and fully accountable. I stream to YouTube so that I can increase that level of transparency and accountability. Also, I can review the stream on any device, which is pretty handy because the stream is 7 hours every day. So there you go. I'm not monetized in any way, so your likes and subs are super appreciated, and drop something in the chat. Let's communicate a little bit. That's also nice. And let's get on with the thing at hand here. Well, we're finally starting to get some numbers out, which is pretty nice. Now that the government has decided to come back to work. So I use two news sources. Investing.com is my older, more go-to, because I like the two things. I like the format here of the presentation for reporting and of the economic calendar, and it's nice for screen snapping, throwing in Discord or whatever else. Investing.com only lists the actual financial or economic reports on this calendar, not, news, the press secretary having a news conference. Those are never listed here. So this is the real reports deal. And here we are for today. We've got several reports out. PPI is one of them. And this afternoon, in a little bit here at the top of the hour, we're going to have consumer confidence, the CB consumer confidence number. This is free, and you can filter it any way you want. We also have, there's got an earnings capability. There's nothing, of course, this week. Pretty much wraps up next week, I believe. Holidays, was going to talk about Thanksgiving. And the other news source I use is Financial Juice, which is a similar docket feature here, but it does have things like Trump is going to have a turkey pardon. He's going to pardon the turkey for Thanksgiving. Okay, well, that's okay. It has this kind of a thing here, these kind of press briefings or whatever they are. And on the right side is a bit more of a squawk box feel, more up to the minute, also filterable. So that's where we are for news and reports. Let's get to the all-important pre-market. Remember, this is a holiday weekend. It's very light. What's going on here? Could be light volume. Holiday weekend or holiday week. Be aware. With a lot of reports now that the government's, all bright-eyed and bushy-tailed coming back to work. So this is investor.rt, which is my charting package. This is the micro ES, micro NQ, micro ES high time frame chart, or my micro composite, and this is the market profile. See, we're pretty light volume, 173,000 contracts. This is the ES mini, same exact setup. I'm trading the micros now for risk management in this environment in my live account, so there we are. Here is yesterday's RTH session, and here we are today. What have we done? Well, we opened right there. Let's get this a little bigger maybe, huh? What do you think? There we go. We opened right here. We traded down, we traded up, and we're back just a little bit below open. Pretty well balanced overnight. Lighter volume in the top distribution from yesterday, which is a P shape or short covering buying profile. I would imagine today that we are going to have a balanced, probably a open auction opening. And I would expect, unless there's some news tip over or random risk event that drops out of the sky, you know, we had this potential thing with Ukraine piece that was a surprisingly small bump. That was a surprisingly little bump, small bump in the market here, and of course, knocked the dollar down. But there we are. Let's get on to the the micro composite, which is my higher time frame chart. And everything I do here is very simple, very straightforward. It's based on data, price action, and probabilities. There's no indicators on my charts or my book map. And so let's go. This is very simply a RTH session only. These are daily candlesticks. Wherever price overlaps, or these candles overlap one another, I draw a volume profile around them. By doing that, I generate the high and low volume nodes, which are these red and green lines here. And I generate a micro composite VPOC, high, low volume area, or value area, all that stuff. These high and low volume nodes are pushed automatically to bookmap, as are the session prices and market profile, which we've already talked about. Bookmap is right here. Now, this is, first and foremost, this is Blue Boy. He's my teammate here. He's a highly proprietary, very expensive indicator, otherwise known as a vertical line, which I throw on the opening print of each session. And the reason for that is I want to glance left and make sure I see Blue Boy on the job here, and I know then that I have the entire session in view on this chart for a complete understanding of context for the trading session. Again, nothing complicated, nothing mysterious. This is the dome or the price ladder or the level 2 book, whatever you want to call it. Prices, resting liquidity. Ask, bid. Boom, pretty simple. This is the micro composite column where I manually enter these values. This is the naked volume point of control from yesterday, because it is the point at which we closed. This is where the POC closed yesterday, and that is the most recent naked volume point of control from an RTH auction. And the other levels are in here. I put them in there manually. These are the high and low volume nodes pushed from IRT to bookmap. And this is the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. You could call this the Globex full session. It is not the overnight. It will not stop plotting at 8:30 this morning. It will continue to record the volume. This is the RTH volume profile, which will reset one way or the other this morning at 8:30. And this is my pretty important high notes column. The first thing I do here is determine the open type for today's RTH session. And then I change the column title to reflect that open type. Yesterday we were higher in range. Today looks like we're going to open lower in range. And how do I determine that? It's real simple, and there are only two criteria. First of all, there's only 4 open types: higher out of range, higher in range, lower in range, lower out of range. Obviously, the two higher out of range and lower out of range are gap up and gap down. So how do I determine the open type? Well, if we had to open price right here, right now, how would this price relate to the previous RTH close? It's right there. So we're lower than the close. How would this price relate to the previous RTH range? Well, there's the high, and the low's way down below us somewhere, so we would be in range. So what are we? We're lower in range. So the first thing I'm going to do is change the title here. And I do this strictly for my own benefit, for screen snapping and recording and the stream. When I look at this column 2 years from now, I'm going to know exactly what happened in the overnight when and what open position we were in. That's why I do it. This will also determine the statistics that we use for the associated session prices. Now that we've done that, you don't see them down here, but there's a bunch of flags down here, and there's a bunch of statistics and stuff from yesterday. So we're going to clear the column. And we'll put those in for today. Now, these are the session prices pushed from IRT. And you'll notice there's no indicator. And this is real simple. There's nothing magic or mysterious. There are a POC for the RTH, a POC for the full session. POC is nothing more complicated than the price at which the most contracts have traded so far in the session. So 67.19 is the price at which the most contracts have traded so far in the overnight session. There's a VWAP for both Globex and the RTH session, and there is an open, there's a mid price for the RTH session. The only other prices that can be a little confusing are the IB high and low. And what this stands for is initial balance, an old market profile terminology. And what these two levels really reflect is the high and the low of the first 1 hour of the RTH trading session. Nothing more. The high and the low of the first 1 hour. As the price trades up, and when we open, it'll go up. The low will go down. The minute we open, this price will jump up above the current price somewhere, wherever we open. That's all there is to it. Now, let's look at the statistics, which are important. And they come from this study in IRT, from IRT, right here. Now, conveniently, IRT highlights the correct open type, so you can confirm that you were right or wrong. But unfortunately, that only happens after 8:30, and we want our statistics to be in and everything prepared before the open. So we're going to be opening lower in range, we decided, right? Okay, real simple. Price looks back. The total data set here is 1,626 days. Of these 1,626 days, we opened lower in range, 476 of them. Of the days where we opened lower in range, price revisited the overnight volume point of control 80.7 times. Overnight volume point of control Come on, mouse. This new mouse and I are not getting along very good. 80.7. That is exactly all there is to it. Overnight mid, and then I'm just going to go down the list. The overnight mid here is 82.4. Overnight mid right there, 82.4. Let's look at one that's important while I have it in view here. Let's look at the previous close, 73.9. The IB high, thank you very much, 69.5. Now, why did I put those initials? The minute we open, remember, the IB high and low are nothing more complicated than the high and the low of the first 1 hour of the RTH trading session. So the minute we open up here somewhere, here's where price is, this is going to jump up there to the high. And the low is going to come up below it on the low side. Not here anymore. So I'm going to be going, what the hell was 69.5? And I'm going to know that it was the IB high and down below is the IB low. Overnight low is 66.8. Oh, well. Yeah, the overnight low is 66.8. Previous value area low is 67.2. Now, this is pretty important and a good example. Here's the previous value area low. 67.2. Okay. Well, I don't guess 37 is going to work very good, is it? 67.2. All right. Now, what's that tell you? Well, how are we going to get to 67.2 or 69.5 and not get through 66.8 first? These are probabilities. They're not hard, fast lines in the sand. It is just simply statistics. These are suggested something to give you an idea, to ground you in your trade. Quite obviously, we're going to get through the overnight low if we're going to get to the previous RTH high or the previous value area low, isn't it? How can we possibly not do that? So these are not hard, fast lines in the sand. They are, in fact, probabilities. POC, overnight low, IB low, we'll look at that later. Previous low, 54.0, that's somewhere. Didn't I see that? No, let's look at previous high. Where the hell did that go? Previous high is 41.6, right there. 41.6. I think we're going to have another, oh, come on, Alice, get those where you belong. And the previous overnight high is 51.3. Again, how could we possibly get to 51.3 and not get through 41.6 first? These are just probabilities. These are the percent occurrence that price revisited this level out of 1,625 total trading days and 476 trading days where we opened lower in range, period. There you go. Okay, that ought to be enough to keep me in upside down for a while here, I think, statistics wise. And now it's time for wow, I'm doing pretty good here. I can't quite imagine that, but anyway, must have been forgetting something, I guess. Now it's time for me to do something that I do every day, which is the TLab snap. And the TLab is a bookmap Discord chat room started by a guy named Tom B. and continues to be led or whatever by him. And every day I make 2 contributions there. One is I post the reports and the numbers around 6, and then at about 8:20 I post this snap for them. This gives anybody in there that doesn't have all of the numbers and whatnot that they could want you know. And what is, yeah, okay, make sure that's correct. So the Traders Lab, it is a bookmap Discord chat room. So it's sponsored and provided by Bookmap. But it is completely free, and you will never be solicited by anything there, which is pretty unique today. My stream here is probably one of the few also the same. Tom is a professional trader with 46 years experience reported according to him, and I believe him. I share his philosophies about risk management and trading and discipline and all those kinds of things. However, now I will caveat, he does not trade live, nor does he call trades, and it is a Discord chat room, not a live stream. He does live stream, I think, an hour and a half, or maybe it's 2 in the middle of the day, like 10:30 to 12 or something like that. But it's pretty much a review mirror. It goes back from the beginning of the opening of the session and, narrates along with price. So, and through the day, continually chats and whatnot else, but it's not, there's no live calling of trades and he certainly doesn't, share his screen and trade live. So there's that. But nice guy. One of the only places I recommend, and I certainly don't recommend any of the other Bookmap Discord chat rooms because they are they're not, the only 2 that I visited were very definitely, third word out of the guy's mouth was trying to sell you something. So there you go. All right, now I'm getting all confused here. Let's get on to something more important. Let's get on to being able to trade. That's kind of important, don't you think? In order to trade with Bookmap, you need to activate the trade control panel. And the first thing you do is select a way that you will interact with the system and trade with your chart. With your mouse. If you're going to trade with on the chart, then the only place you can trade with the mouse is the active data column. If you trade with the DOM, the only place you can trade with the mouse are the DOM columns, and both is, as you might imagine, both of them. Now, the next thing I do is I use multi-brackets, which is a real good tool. This implements the risk-neutral trading methodology, and this is the smallest risk-neutral package you can have, which is 2 contracts, because you need to have an even number of contracts. Let me explain that. Here's the package size. The next thing you need to determine is your stop loss for the package. The first criteria you should review and base this on is your account risk parameters. Remember that your goal or job as a trader is to preserve your account and to grow it. Okay? So the first thing you need to determine here is your account risk parameters. What instrument are you trading? What's the volatility on that instrument? What's the volatility of the market right now? If you're, this is the MES. If you're trading the NQ and you think 12 ticks is going to get you somewhere, you're crazy, right? You need to plan all of this before the market opens, long before now. Should have been done last night or early this morning in your homework. After you've selected the size and the stop, the first risk neutral profit target, or T1, is automatic. It's for half of the package. 1 is half of 2. And the ticks here are for the same number of ticks positively as the stop is negative. The minute you achieve T1, the worst that you can possibly do in this trade is scratch. It is risk neutral. And then there's the runner. And you can have 4 contracts, high volatility, anything you want to do, okay? So that's that. Now, we close that. Notice that all the metrics up here are visible, same as over here. I don't need any of the other tools in the trade control panel, so I confirm the number of contracts, and I can click the button again. It stays green, it stays unlocked. I get my real estate back, and I now have cancel and close, and I have all the metrics up here, which this can be turned off or on. So now I'm ready to trade. I'll be right back. All right, we're going to open in 3 minutes now. Let's see, what have I forgotten here? We're set up to trade. That's pretty important. We have our risk neutral package in place. We've gone through the pre-market. We've got all our statistics lined out. Ooh, baby, we're smoking here. And let's hope that this damn thing works. I have a configuration here, but it doesn't seem to work. So I'm going to set this to reset now on the double click because I don't have confidence in it. There's a problem somehow. What support has suggested I roll this back, and I see that they've already done something I didn't want to do. Damn it. All right. So we have some news up at the top of the hour, if I'm not wrong. Let's be careful about that. Yes, we do. We have consumer confidence, industrial production. It's up in 9 minutes. That's Q2. And we have the consumer confidence at the top of the hour. So be careful of that. Who knows what will happen with Random Risk and Company. I think we're ready to rock here, boys and girls. I'm not mistaken. And I might be, but welcome. Subscribe, thumbs up. Yeah. Smack that bell thingy now. Just to give you some heads up, I will be not streaming, obviously, Thursday. There's no market. The market does open for an abbreviated holiday session Thursday afternoon for the overnight at 1700, and we'll close at 1300 on Friday. I typically scrub those and do not pollute my data set with those half days. I may stream that day just so that we can watch the market and have some conversation about it, but I will scrub those. I will be scrubbing that data as normal, and we're going to open right now. And we didn't reset. I'm so pleased. God damn. And there's a double click and it's not working either. There we go. I reset, and who knows whether it's late, early, I don't know. So frustrating. This thing worked forever. I don't know whether it's too much data coming down the pipe and it's got its priorities off, or I don't know. Who the hell knows? So let's start watching our statistics, eh? We got the overnight mid right here. We're going to catch it pretty quick. And then we got the overnight volume point of control. And here's the previous close. My goodness. Aren't those stats falling bing, bang, bong? Yes, they are. Is that unusual? No, it's not. This is a fact problem right now with the with IRT and the update of Dropbox. This will repopulate when they re-export here in a second. Jesus, magic. Remember now that our IB high is now right up here, and our IB low is right down over here. And if our friends at long ago when I started these sessions and the system, session prices and all that stuff, I was using Dropbox a lot. I still do. Have for years, 10 or more. I need to push these into, you see, it's just whenever you see this is updating, I need to push these internally. Now, I share these session prices with anyone who needs them freely, and I'm happy to do that. Just drop something in the chat that you'd like the session prices, and I'll hook you up. The way this works is I start publishing these and pushing these at 1700 on Sunday night through 1600 on Friday. Typically, this week, of course, will be different. And what you get is I'll share with you a Google Sheets link, and you just slap that in the Cloud Note column here or on the session price lines, and boom, you got these instantly. And these are pushed from my IRT. I have MES and ES, and no problem. Okay. And what have we done? Well, looky here. We've taken out the mid. The high is going to move up here. We've taken out the overnight VPOC. We're tagging settlement. Well, we're cleaning up. We're cleaning house, eh? What's going on in the bigger picture? Now, one of the things I need to do here, which is really important, is change my charting from full session to RTH. See how tough that is? Oop, what happened here? Here's yesterday's RTH, and here's the new one. And I'll tell you why I do that. If you're good. If you beg me. The relationship, this to do with the session prices. The relationship between the value area high or low and the developing value area high or low. I can tell you how light the volume is by how quick those are updating. This is so irritating. Savey. Let's make sure we do all of that. Let's get back now. This is the mini, and here's the micro. So here's our trading charts. The reason I do that is as follows. You'll see the developing value area low. somewhere here, right there, and you see the value area low. Okay. All of those folks who use my session prices, and me included actually, I expect, and per IRT, the value area low and high reflect the current, or the previous, auction. You see how these just changed? You see how value area low just jumped down there? That's because I changed from full session to RTH session. So all night long, the entire overnight, these prices have all been current. This has been the current auction. These have been the previous auction. And last night, up until 8:30 this morning, the previous auction was yesterday's RTH session. The second we opened today, RTH, previous auction suddenly became last night's overnight. So these levels were not reflecting what I expect and what other people who use these levels expect. That's why I changed the session prices, and that's why I changed the sessions in IRT from full to RTH session only after the open. Okay? And look at here, we're pinging them, we're taking them out one after the other, baby. What did I suggest we might do this morning in the pre-market if you were listening? Open auction. And now what we've got to do is we got to get Blue Boy Jr. on the job over here, don't we? Don't watch. This is that real expensive proprietary indicator. There you go. Now we got the Blue Boy on the job, so you can rest easy. Okay, you can look now. Again, this is nothing more than a vertical line. I put it on the opening print of each session, and it is a visual cue for me. If I glance left and see this line, I know that I have the entire session in view, so I have a firm understanding of the context. If I don't, then I need to fix that. Previously, I would add migrating VPOC migration flags up and down here all day long, so that I would be able to know where this POC had been. And remember, the POC is nothing more complicated than the price at which the most contracts have traded. So right now, we've traded 1,493 contracts at 70 at whatever that is, 24.75. The very split second that one of these says 1,560 or 57, this is going to move there. Nothing more. And the yellow line just lets you know, plots where we've been. We opened down here, then we were here, then we jumped up here, then we jumped up here, and we did a crazy Ivan over here, and now we're here. Easy. It is much more volatile, obviously, in the beginning of the session because there's a lot of business coming down the pipe, and a lot of people get things to do, need to do things. So there's a lot of volatility in which prices are being traded. Pretty simple. Again, nothing that I do is mysterious, complicated. It's not, trading isn't easy, and there's a lot of stuff to remember, but there's no hocus pocus. You don't need to have a, pointy hat with a star on it and a magic wand in order to do this. You need to have statistics, logic, prices, price data. That's it, I believe. And approach it as a business of probabilities, not a video game or gambling or, a hunch or, oh boy, we're going up here, I know it. Don't ever think you can predict the market. It's a random environment. All those old things that you've heard 1,000 times, trade what you see, not what you think. Anticipate where you think what might happen. Do not try to predict what might happen, because that throws you into a monkey boy, problem with your desire to be right. You don't want to have that influence your thinking here. And here we are. What are we doing? Well, we're trading up to the high. I bet we go back down here a little bit. That's what I think. Now, the NQ is, doing the snake thing like usual. here we are. Microcomposite volume point of control. Previous microcomposite volume point of control from the 12th of November. You can see in the info box over here, wherever my mouse is, gives you the status for that day. And there you go. Notice also that I try to keep my coloring and all those kind of levels consistent across all the charting. IB, green. IB, green. Value areas, the blues. There's no IB over here on the composite chart. IBs. IBs, green. Developing value areas, or developing POCs are yellow. I only keep the developing VPOC on my IRT charts for the current session. And I think I mentioned, or at least I hope I did, on Bookmap, the bright yellow here is the POC for the current RTH. The more muted yellow is the POC for the full session. A VWAP, which is volume weighted average price for the Globex, and there is also one for, and the damn thing isn't plotting now. It quit. Boy, that's really irritating. This anchored VWAP crap is not good. I don't like. Anyway, let me fix the VWAP so we get something going over here where you can watch this tomfoolery. This is supposed to be the VWAP, right? And it's supposed to reset properly, and it didn't do that, did it? God damn. Irritating. And there's the Globex, which is right. So what are we going to do? What the hell is today even? I don't know. Ooh, not sure what that was all about. Huh. Well, all right, if you're going to be that way. What the hell's going on? Well, first of all, I don't even know how we do the days in this thing. I don't remember. God damn it. So let's do this. Let's do a create VWAP session time. There we go, 1026. Now we've got a green goofy thing driving around somewhere over here. I really don't like this tool at all. VWAP. Wait a second. What I wanted to see was 25, 10, 26. Okay. Let's get rid of that. Let's get over here. What we want to do is go 11, 21. Let's make it 25, shall we? I don't know. You're not supposed to have to do that all the time. It beats the hell out of me. It doesn't seem to want to do the right thing, and I don't know. And now we should have pretty soon, as soon as it's through drawing up here, we ought to get the VWAP for the day. Jesus. This kind of stuff, there we go. You see it's drawing now correctly, and it's aligned with these. By the way, on the volume profile, there's the VWAP and there's a VWAP, so it's not a big mystery, but just frustrating. Save the workspace. This stuff worked for years, and now this volume profile and whatnot is having an issue. I may have to actually roll back, which is what support suggested I roll back to a previous version. I didn't think that was make me feel all warm and fuzzy about paying these guys several. I was going to buy the Global Plus Lifetime this go round, and I actually today was the day that it renewed the 90-day thing, but I didn't, and I'm not going to. I'm holding off on that. unless I can get somebody to support to tell me I get some great deal on Global Plus for Black Friday or whatever it is. All right, so savey, make sure you save your workspace, make sure you do all that stuff. Blue Boys just added hard. I noticed I changed the last price line. That blue thing was driving me crazy, and it's a short trip. A couple of things, just housekeeping, sort of. Let's see if I'm missing something here. Well, something that I need to put in here, which I try to do every day, which I think is important to get my point across or to make my position clear. I'd like to point out here that nothing I say or do has any political slant or opinion to it. But we are living in an environment where we have a unusual situation, in my experience. We're heading for that top of the hour too and selling off. And I refer to it as unidentified critical risk. Okay, we know very definitely years in advance. Now these, it's a little bit crazy because we have that government shutdown, right? But these things like core PPI, non-farm payroll, GDP, all of that stuff, those report releases are scheduled years in advance. We know years in advance that non-farm payroll is going to be released the first Friday of every month at 7:30 in the morning, except for a little hiccup to do with how the date relates to the Friday, I believe. I got to look that back up. Anyway, we know that. You can mitigate your risk. You can plan for it. You know very well what's going to happen. And remember my conversation earlier that your main job as a trader is to manage your risk. Preserve your account. What the hell good does it do you to have a fantastic back-tested setup and strategy where you're making, expectancy of 1 million points of ticks a trade and all that stuff, and you blow your account up and can't trade tomorrow? What the hell, That's the most important thing for you to do is protect your account and grow it conservatively, I think. But anyway, so we know about these things. There's no question about it. We know that we can mitigate our risk, and we know exactly what to do. On the other hand, currently, we have an unidentified risk potential, which is huge and critical. Right here is 229 points, not ticks, points, sell-off on the micro ES. That was the result of a tweet at 10 o'clock in the morning out of no place. The tweet, turns out, was based on wasn't the truth, wasn't based on real data, and the threatened response never happened. And that's fine. If Trump wants to tweet something, or anybody most of this critical risk is now hinging around the government or the administration, because there's, that's what's up. But if that's his business, I don't care. And I don't care who you voted for, and no matter what. But this is an unidentified critical risk. If you didn't have a stop in the market, didn't have proper brackets, weren't managing your risk, and only taking A+ setups, you could have lost your account out of nowhere. So when I talk about critical risk, that's what I mean. And that's why I was saying earlier in the pre-market, by the way, investing.com, you'll notice it's only pre-scheduled real financial reports and numbers that we're used to. Financial Juice throws these in. You see them, they're usually blue. Press secretary, press briefing. Trump's going to sign something. He's going to pardon the turkey today. That's always fun. And a tradition. So that's a real benefit to this. It gives us a little bit of a heads up, and sometimes these things will pop up out of. I mean, they are fairly responsive to these new schedules. Like the other day, yesterday there was something from Trump at 1400. I forget what he was going to do, and all of a sudden at 1300, the What's Her Bucket had a press conference, and that suddenly showed up over here. So that's really nice that we have some sort of a heads up. But that's the story about random risk, and it is really critical. I can't say enough about it. I mean, look at that. A lot of people lost a lot of money right there, out of nowhere. And that's never a good thing. Well, open auction, huh? Who said that? Who was that masked man? Traded up, traded down. Here we are within range. Will we continue this episode? Who knows? The last few days, we've sold one direction, or we traded one direction hard, traded the other direction, and then come back to the middle. A little bit more balanced volume over here. And here's today. Remember, we got news at the top of the hour. There we go. Now you know as much as I do. What else is happening here? Let's just check. I'm forgetting to do my map. I'm so happy that young fella got the plug-in for OBS fixed for my timestamps and chapter markers, because boy, that was a nightmare for that month or so. OBS put out a big update and it broke my plug-in that I lean on real heavily to put the timestamps in, because the chapter markers are so important to this stream for me, and maybe for somebody else. I would think so. The stream is a minimum of 7 hours long every day. Well, I'm not going to sit and listen to all 7 hours of that, and I don't expect anybody else will either. But I want to be able to go through accurately with those chapter markers and see when I did the trade, when I said this, when I did something else. And so now he got it fixed, and they're back in business. And but that month or so, I kind of got out of the habit of hitting them. I was typing everything, and what a nightmare that is for me. All right, we got VWAPing, volume weighted average price. I guess you know what that is, I assume. Here is the bright POC. This is for the RTH. The more muted POC for the full session. And how do you know that? Well, look here. There's 7,100. That's the highest number in that list. Here's whatever this is, 2,300, and that's the highest number in this list and in this volume profile. This is not magic. This is not, you don't have to be some mystical soothsayer to be able to go, I think we're going to get a VPOC migration in a little bit higher to such and such a number. It's real simple. Here's 2441. Wherever the next closest number is, unfortunately, it's right here at 2352. You could say, well, we're trading up here. We're building out. Here we go. We're going to trade up here. I got an idea that the POC is going to shift to 04.5 here pretty quick. Watch this. And that'll make a liar out of me, of course, but it's just math, numbers, probabilities, data. And if you keep it to that instead of, whatever it is, did the moon come up in Miami or whatever the hell it is that you lean on that isn't based that way. Watch for this VPOC migration now. We're gonna only need a couple more 100 contracts right here to get us to that price, 475. And then, mysteriously and as if by magic, this POC is going to move up there. Or not. That's the big or not. So get those basics out of the way for folks that are new that they are. I try to go over the same stuff and I realize it's probably boring to others, but I don't know what else to do. I don't know how to keep everybody on the same page. I would really appreciate it if there was more interaction in the chat. Hey, what is going on with that? What did you mean by that or something? Then I wouldn't have to repeat a lot of this stuff. But we are increasing subscribers and viewers and stuff, so I'm assuming that's new people. I don't know. And if I didn't mention it, I'm not monetized in any way, so... well, and guess what happened? Oh, how did I know that? I'm magic. Send money. Okay. Cool. Love it when a plan comes together, huh? All right. Okay. Well, remember that number at the top of the hour, so 2.5 minutes. Mind your risk. Mind your risk. We took them all, didn't we? We got almost all of the statistics that we had put in the system, except for the previous highs and whatever that one is. ETH, I guess. Huh? Amazing, isn't it? How does that work? Well, it's a statistic. Now, what I like to do, if I can do it here, is quite a range today, but I like to have 1 point high on the price ladder, as we are now, and blue boy on duty. Because that gives me a consistent sense of scale with price movement. There's a pop. Whoa, what happened there? There's that number. Maybe a whisper number came out on that. Right back to the overnight point of control, and we're going to get that. We're going to get the actual number out at the top of the hour. I suppose that was a whisper number, a minute ahead, I guess. With these big price swings and the volatility in the market range, however, I'm unable to keep $1 or 1 point high, meaning it's 1 point between price increments here, i.e. 4 ticks within each one. But that way, because I use the risk neutral bracket, right? So I know that 3 of these is a stop out. 3 of these, the other it positively is T1. I know that this movement is 04 to 20. This is basically 15 handles across here. If this is down here like this somewhere, I don't know. Is this a lot? I don't know. Do you? So that's why I try to do that, just for me. And remember, this is my virtual journal, right, that I'm sharing. And just a word about that. Obviously, everything I'm looking at on my 2 primary monitors here are captured on the video. And the only way I get what I was thinking at the time into the recording and so that I can understand it later is my narration. That's how this works. And the reason I started this whole story, which I think was suggested by Tom, maybe Tom B, I don't remember now, but I don't multitask well and I want to focus on the market, right? I believe that I want to have all the data I need to trade right here on the hard right edge. And I want to focus on trading. I don't want to be doing screen snapping and typing and all those things you need to do in a journal, which is important. And I believe journaling is important. So this is, falling off a log simple right here. And so much more, for me, so much more detailed. And, you could go back and replay the damn thing and watch exactly what happened and hear what I was thinking at the moment. Pretty cool. Yesterday, didn't take the trade because there was an issue that I had done to do with the charting signal. The system took the trade. I didn't. That's all captured, no problem. In the stream, in the recording, everywhere. And the reason I stream to YouTube, besides the transparency and the accountability, is I can review the stream on any device. Otherwise, I'd have to stand here and listen to the replay. So there's that. What do you suppose that number was? I'm guessing not the best. Shall we look? Well, pending home sales. Up 1.9. That's a little surprising. See, here we go. Here's the little gal. Yeah, they're trying. Good for them. Boy, I hope they can. For whatever reason, Trump folks are motivated to get this done in Ukraine. I am all for the positive result. For those poor people in Ukraine. Yeah. That the famous Gaza peace thing is pretty pear-shaped. It's amazing how short the news cycle is nowadays. It's incredible. I think it's based on the social media and all that crap. Basically, a couple of 3 days at a time. That's why the misdirection can be so effective. Yeah, there you go. Oh man, big miss in consumer confidence. Oh, 94 previous, 93 forecast, and 88.7 for the actual. Yeah, well, I mean, is that a surprise? The highest unemployment in 4 years. Consumer prices go up every day. Inflation, and that means inflation. You know, I don't guess it ought to be a big surprise to anybody. It seems like it is to some people, but I don't get it. Ooh, crazy Ivan. So let's see now. 906. What does that mean? Well, I can start thinking about trading now. And let's talk about that a little bit. I have vetted, and I think I've talked about it enough that that you should only be trading vetted setups. And what do I mean by all of that? Well, I have vetted, and am in the process of that every day, the initial balance trades. First of all, we know what the initial balance is, right? And that's 75 to 30. Wow, 50 handles. 50 handle IB, pretty wide. We know that this is the IB high and the IB low, and that they are only the high and low of the first 1 hour of the RTH trading session. So at 9:30, they won't move anymore. And there is a statistic associated with that, these two levels, that becomes active after 9:30 Central Standard Time. And that's called the initial balance statistic, or stat. And it looks like this. There is, come on, what's going on here? Well, this new mouse and I don't get along. There is a 97.8, 97.8, 98.3, 97.9. There is the greater than 97.8 probability in all four open types that the IB high or low will be exceeded by price at some point in the balance of the RTH trading session today. Today, in particular, it's 98.3. What does that mean? That means that there's a 1.7% probability that we will not exceed or take out the IB high or low. That's a hell of a statistic, isn't it? There's a 32.9% probability that we'll take out both of them. So that is the IB statistic. And the way I believe that you should approach vetting a trade is to figure out or determine a setup or a structure or a chart pattern or whatever word you want to call it that happens repeatedly, frequently, and which has specific criteria that you can use to determine how successful that trade could be. And what I mean by that is you then capture, away from the live market, backtesting, however you go about doing it, you capture a statistically significant data set of that setup and those criteria, and mathematically, statistically determine if it has a probability or an edge expectancy or not. If it does, every time it presents itself in the live market, you take the trade. And the law of large numbers will manifest the expectancy to your bank, to your bank account. So I'm working on the initial balance trades. There's the high and there's the low. Do I have an initial balance statistic at the moment? No. Why not? It's only 10 after 9. For the next 20 minutes, this is going to go up with price and this is going to go down with price. Real simple. There's not any maybe or oh, I think this or I feel that. No, if you do that, you're in trouble. All right. Let's also then now, still maybe, let's look at my trigger chart here. And this beauty right over here. Okay, so how do I go about all this? Well, first thing I did was tried to determine or to capture this data manually. And I realized right away that was tough. So let me start over. The first thing I did was determine the criteria to validate the IB trade. And there's 2 IB trades associated with the IB high, 2 associated with the IB low. There's the IB continuation where price comes up, takes the IB high, continues higher. The IB low, IB failure, price comes up, takes the IB statistic, can't get anywhere, and comes back to the middle. That's a mean reversion. Looking at the price chart, it would be like this. Price trades up here, keeps going. That's the IB continuation. Price comes up here, takes the IB stat, fluffs around, can't do anything. Mean reverts back to the center, back to the mean. That's the IB failure. IB failure is just a fancy name for a mean reversion trade based on the initial balance level. Mean reversion, outside in, revert to the mean. Outside in. Okay? Now, a couple of things to bear in mind that I try to be aware of. The IB continuation trade is suggested in a day or a context where we have a directional movement, right? The IB failure, by definition, is mean reversion. So what does that suggest? That would be a balanced rotational day. So that's a heads up. By vetting the IB trades gave me 2 possibilities, gave me 2 structured vetted trades, one for continuation in a directional day and one for a failure or a mean reversion in a rotational day. If I'd have only started out vetting mean reversion trades, I would not have anything for continuation day or session. So that's why I chose that. Okay. Now, this is the trading system, and I want to point out real clearly straight up front, this is simulated. This is just a note to reflect that I've chosen simulated in IRT, and there's no symbol in the trading list. So when I activate this system on the chart here, it will only be within IRT. It will have nothing to do with my live AMP account over here on Bookmap. What I will do is when I have a signal and a trigger and a trade is taken by the system on IRT, I will manually take the trade on Bookmap in AMP at this point. Just being cautious, risk averse, I want to be sure everything's working properly before I put my money, which is right here, on the line. That's why I'm working on the micros. If something goes wrong, goes haywire with the trading system or whatever, at this moment, I'm risking micros. I'm not risking minis. And I'll get into how I'm scaling up, and I have a tool for that, etc. So here's today, here's yesterday, here's today. This was the IB high yesterday. There's the continuation zone, the pullback zone, the trigger zone. IB low, pullback zone, continuation zone. Why aren't they plotting over here? It's not 9:30 yet. So let's widen out a little bit here. And let's wait for 9:30. And when 9:30 happens, these lines and stuff are going to miraculously start plotting over here. And in anticipation of that, I am going to make sure I'm unsimulated. Nobody up here. I don't want this thing sending trades to AMP at this point. And I'm going to send these signals to the chart, meaning this is now going to be working over here. Well, I think so. There we go. Now, I'm going to get rid of the targets here. I can put whatever I want. I can put stop targets. But I'm going to get rid of those lines because it just plots two big green lines across the chart, and I don't care. Okay. No, I did two of them. I don't need that. Now what have we got? Yeah, that's not what I wanted to have happen down there now. Damn it. Okay. I screwed that up. What is going on now? It's thinking about stuff here. All right, let's go down here. These are the signals and all these indicators, and all the signal markers and these indicators are just coded by me on this chart and the trigger chart, same, which is just a copy. They have nothing to do with the actual signals from the trading system, except they represent or they reflect exactly these signals and levels, but they don't hook together, right? So let's get rid of one of these. Actually, let's get rid of both of these because that's pretty stupid. All right, now the trading system is off the chart now. It seems to be thinking about something. And let's give it a minute to get its act together here. And let's send the signal to the chart one time. There we go. I don't like the delay here at all. So I'm going to remove this and go apply. And that line goes away. There you go. Now, when a signal and a trade is taken by the system, it's going to plot right over here. What that looks like is, see if I have one here somewhere. Looks like that right there. This is from the 20th. Okay. What the hell? There we go. Okay, so. Are we ready to start trading? No. Why not? It's not 9:30. And I know this is boring and probably repetitive. But this is trading as a business. This is not gambling, whipping and spurring, gunslinging, pick one. And none of that stuff. And let me say at the outset here also, this stream is not, good morning, Richard. How you doing? I didn't see you drop in there. This stream is not my way or the highway. You know, this is me. This is my virtual trading journal. My narration here gives insight as to what I'm thinking at the moment. In sync with what I'm seeing on my video on the charts, And I trade as a business, consistently profitable business based on statistics and probabilities. Not the purpose of this stream is not an adrenaline rush or a dopamine kick for me or viewers, unfortunately. And if that's what you're interested in, I share everything openly and in detail. I'll go through the backtesting. I'll go through everything else. I trade live, so you can see exactly when that happens and why. And that's of interest. Super. I hope it is. I can tell you that when I started years ago, I wish to Christ I could have found something like what I'm doing right here, right now. Would have been huge. And we've got about 10 minutes until 9:30. What happens at 9:30? Ooh, the initial balance is set. I can't get the dollar high here because I've got so freaking many. We got a big range, 75 to 30, 55 handle range. Light volatility, my guess. Let's check. Oh, who was that masked man? 70% volatility based on average at this time of day. Average true range is 7 handles. This is 2 1/3 times my stop loss. That's a very, very dangerous situation right there. And this is implied open interest. I'm not sure if I care, and I got to do something with this big blue space. I used to have charts here that what I tried to do last weekend was streamline and get my IRT working efficiently. What I care about is trading and charting. I don't care about a bunch of bells and whistles and impressing people with all my magic charting tools. It's a business. Remember that. So, I know I repeat it a lot, but I want people to be sure they understand. When I see a trade happen over here, and I will know in advance, and I put the trade on over here. This is my money, my dollars, my funded account, not some prop thing or something else. And so I'm risk averse. I fully understand that my job, my primary mission as a trader is to protect, manage my account, protect my account, preserve my account, and grow my account via the law of large numbers by applying statistics. So there we go. All right, so you see all the levels here, right? Notice that they're just a line drawn at these flags. And this is an indicator in IRT, in Bookmap. And these are the cloud note columns. This data and this data are exactly the same, pushed simultaneously from my IRT. Well, one of the things that I've done is I have set up so that my pullback and continuation and trigger zones here, the labels for which you'll see over here when 9:30 happens, will also push to and be visible in Bookmap. What I did last night was I created another setup so that I'm now going to remove all of these lines except the IB high and IB low, and at 9:30 the continuation and trigger and pullback and continuation zones will come into the chart here, will come into the Bookmap, and the rest of these lines, you know, close and settle and all that stuff will go away. This is just an experiment for me to try to be sure I can stay on top of, because right now I'm kind of on my back foot watching the trading on IRT and then zooming over and putting it in manually in Bookmap. So what I'm going to do is that now. And I do that like this. See if it works. Stand back in case it blows, eh? So there we go. Now you'll notice that those lines disappeared. I only have an initial balance high, initial balance low. And once the triggers start plotting, which will happen at 9:30 over here, then when these lines start plotting, they will push across and be miraculously, mysteriously, in my true guru Merlin fashion, visible on Bookmap. Oh, yeah. And I've also experimented with some stuff like I can shut off the heat map here. I don't see that these little ticks and dogs are going to... These little graphic things here, which I keep really minimized, are just graphic representations of the liquidity in the book, right? You know that, I hope. That's all the heat map is. This is just a chart, and this is a graphic representation of the liquidity, you know? I'm not saying there's anything wrong with that. I'm just saying that's what it is. It's not some mystical thing. And I don't do... Yeah, I keep it real minimal. That ought to be pretty obvious. So we're going to be 9:30 here in about a minute and a half. Ooh, exciting. Now, here we are. Talk about stuck in the middle, huh? POC, VWAP, mid, IB high, IB low. And that directional day is kind of balancing out now. I'm also going to do something else here. I haven't quite figured out how to do this whole thing. I want to get this over here where it's easier for me to see the trade at the same time, right? Bookmap levels and doing my thing and all that stuff, and the signals as, when, and if they fire. And one of the other things I'm going to do now is do that. Pull this down here, which hopefully will happen. Okay. Now at 9:30, Well, here they come. Here the levels are. So we've rolled 930. Yep, absolutely. You see the pullback and continuation zones here. All right. So far, so good. I'm liking this. And now, pretty quick, I hope, supposedly, those things are going to plot over here. It did last night anyway. Let's see if it happens today. There we go. Isn't it cute? So it's 9:30, and let me now say how important it is. Do not, and I emphasize, do not trade in anticipation of the statistic. We have not taken the statistic. Oh boy, but we're above the VWAP, we're above the mid, we're above the POC. We're going to take the IB high. Yeah, we might. You get long right here, and then it comes back down here, and you get spanked real hard. And this is the voice of a sore bottom speaking here, because I've been spanked more than enough times for this thing. That's my story, and I'm sticking to it. Very possibly, we're going to take the IB high. Yeah, maybe. But let's just pretend you got long right here to close, right at this pullback zone low. And let's see how the price lines out. I don't know why this is happening. I don't want to search anything. Let's look over here. Here's our levels. IB high, IB low, price action. Try to keep it as straightforward and simple as I can. And when we get signals, then we'll start getting the signal markers over here. They will not display on the book map. And remember that what you see being displayed here is just a representation, faithfully represented, I hope, or reproduction of the actual signals and rules in the trading system. But I can warn you in advance, you'll see signal markers like A, B, triggers, whatever, flying off over here out of sequence because they're just based on when that particular rule fires, that marker rule fires on this chart, having nothing to do with the real system. The real system only fires the signals in sequence, and once it's in a trade, there's no other signals fire until the positions are flat. So there we are. There's that. Oh boy, I'm excited now. Got all this new stuff going on here. Oh yeah. Okay. Remember when we talked about getting long right here in anticipation? 64, 21. If you're trading a 3-lot package, you're stopped out. Are we going to get up there and take the overnight statistic, the overnight or the IB high for the statistic? I would guess so, and especially in case that the only stats we've got left that we pulled are the ETH high and the previous high. But, that's just, I'm just anticipating that may happen. I'm certainly not predicting that's going to happen, and what I'm going to do is watch for that to happen. And when I have the statistic, that'll be one of them. Then there'll be the second rule, and then there may or may not be the third, which will be the signal. And here you got stopped again, anticipating that That's Statistic. I'm telling you, I try to share this stuff as much as I can. And it's purely, the school of hard knocks on my side. So there we go. Well, yay. And there's more than one time in recent memory where I've just made an offhand comment. We'll be up here like this somewhere, and I'll say, now watch us go take out the IB low stat. And sure as hell, that's what happened. The conventional wisdom, as I understand it, is that the movement outside of the initial balance, IB high or low, nothing more than the first 1 hour of the RTH session, remember that, is generally the higher time frame, the intentions of the higher time frame. They've got business to do up there, and that's where they're going, or down there, and that's where they're going. And if you stop and think about it in terms of that, of money, capital, who's got enough capital to push the market around? You or me, or Goldman Sachs? Therefore it makes sense. Oh, Panda, what's up, Panda? Dad's spread the trade now. You come in here every morning just at the time when Dad's got to be careful. Yeah, I know it's been a tough day. Oh, okay, we got a snack. Well, are we rich yet? So this is kind of interesting. Now here's something I could do. Come on. I hate it when it does that. Oh, looky there, huh? Pullback zone, trigger, continuation zone. I think I'll leave it like that and see what happens there for a while. Pretty quick, I'm just going to be trading on IRT. I keep stripping this out. I can even throw candles up here and get rid of the last price, and it's a candlestick chart. Unfortunately, Bookmap doesn't offer bars, which are much simpler for me to look at and read. But these are bars. Obviously, it's open, high, low, close. Just simpler. Hope everything's good on your side, Richard. Well, let's see. If you got all excited and hurry, scurry, and blurry and tried to trade to the statistic only 2 times, I guess you got stopped out. Just be patient, grasshopper. If you're old enough to remember, what the hell was that called? Kung Fu or something like that. Carradine. He's a weird guy. Keith Carradine. Yeah. Well, what are we doing? checked lower, didn't have a lot of success down there. Been trading up, quite a bit of volume put in here. We're building a distribution higher. What does that mean? I would suppose look down there, didn't have a lot of luck. I'm guessing we're going to look up here. Makes sense, right? Big short, short covering, maybe short covering. Remember, it's a light weekend, a light day, light volume. What does that mean? That means that deep pockets have a lot easier time shoving things around the way they want them. Also, when it's a lighter liquidity, the market becomes more like the NQ. It doesn't observe levels as rigidly. It'll slip and slide, and it's a light liquidity means, in my opinion, usually means higher volatility. So, no statistic yet. Here are our zones and IBs. You know the whole thinking behind that, I hope. And those levels have pushed over here to bookmap. Ooh, we just had a VPOC migration higher now. That happened. Has not happened here yet, but there we go, right? So we're having a VPOC migration, volume point of control migration in the RTH. This is the overnight, this is the RTH, higher, suggesting that prices are being accepted higher, value is moving higher. We're sneaking up on that IB high. Now I need to anticipate trading, so what am I going to do? Run through the roses. Let's see. Trade control panels on both. I've got the proper package selected. I happen to know that the 2-lot size, the only thing that can be is my risk neutral package. I don't need this anymore. I get my real estate back. I have everything I need up here in metrics. Cancel and close. I'm ready to trade. Should we get one? Oh my, look what happened. Oh, we get stopped again. Oh. And it's, think about all the retail. First of all, think about all the retail guys that are picking the top. What are they doing? Well, they're throwing their stops up here. They maybe do not have any idea about the initial balance or any of that stuff, okay? So all of these guys that are trying to pick the top are throwing their stops up above here somewhere. And all these people that are betting on the come for the breakout traders and all that kind of thing, they're putting their stops down below. And, ooh, here we go. Are we going to get it? Are we going to get it? Ooh, baby. Talk about tease me. Look at there. Oh, come on, one more tick. Huh? One more tick. I think we got it by a tick, didn't we? There we go. There we got a bump. Well, that's news, boys and girls. Something happened somewhere on that one. In my opinion, something happened, and there's my A. There's my A signal. Now I need a B. Oh, yeah, this is definitely news. This is Russia's accepted the peace deal. Something happened. There's a B signal. because we're in here. If we get a trigger, this would be this would signal continuation along. And it's going to take off without us. Am I going to chase it? Absolutely not. So we've got an A and a B and a nothing and a no trigger. Let's see what happened. Let's see who did what. What are your bets? What are your bets? Well, there's nothing showing up over here, but you can bet that's something. That's got something to do with news. I think I said it in the pre-market, and I hope I did. These news sources that I use here, Financial Juice and Investing.com, I use the free version, and they would be tickled to death if you paid them. Or you can get the voice squawk or whatever you want to get. But I feel like it's important to have everything accessible to anybody that might join the stream. So that's why I keep them free. And besides, I don't want to pay for them. I'm okay. I don't need to look at that. Russia expands options for investments in crypto-linked assets. Well, of course they do. Crypto. The criminal's choice. Crypto is criminal spelled backwards. It's just the biggest freaking scam I ever saw in my life, and it just amazes me. There's a lot of amazing things going on right now in the world, in my opinion. You know? So, what do we got? Well, we got an A, very cleanly. That's cool. A B here at the same time. And no trigger. Trigger meaning back down to the trigger zone and Katie bar the door. Now, if we come down through here to the trigger zone, let's widen this up a little bit so I get a better view of these. If we come down here, ooh, sorry about that, down here to the trigger zone, I'll be long. Whether I think that's a good idea or not, it is not discretionary. What'd we do? Well, we didn't get a trigger yet, but we're going to get one here pretty quick. There's a long. When we're going to get stopped? Probably. Likely. Maybe. Who knows? Price is doing the dipsy doodle there. There's a stop. Okay, that didn't take long, did it? But the point is, that was a live trade, real market, and I took the signal. A, B, trigger. Just as, let's hope. Let's get over here and look. Oh man, what happened here? How the hell how did that happen? Well, that's not good. Somehow IRT took a dump while I was out of the room. Bummer. And stopped just by a tick or two. Now we haven't gone any place yet, but that's the trade right there. I mean, trade one. Try to keep my, yeah, I'm not going to be, let's see now. What is going on here? This is all pretty freaking confusing to me now. What we're doing here, I don't know. Why that took a dump, that's not a good thing. Okay, what else is going on? Have we got another one? We got any other signals or something? No. There's the A remains intact for this B. We need to have the pullback, which we didn't get right here because of this at or equal the pullback zone, and we didn't come up to a trigger. Now, this is a day that is not surprising at all that I will get taken out because, like I said, light volume means higher volatility in my estimation. This doesn't look good here. I'm going to have to redo this data. Oh, go, and it didn't save at all. We're back to the old. We're back to our old stuff. We still have the, wait a second, do we? Yeah, now I'm off, okay. My charts are off, I'm off, and so I'm going to be standing by here wondering what to do next. Because of the wonderful things it does. So here is this, if we get up here from the continuation zone, which I'm not getting over here. We did not get a trigger for the short here. And that's, I don't know what we're going to get with that. Okay, I need to figure out what's going on all fronts here. Let's see what we're doing over here. First of all, let's get this opened up and see what we got. That's exactly what I thought we had. Okay. Apply. Okay. That will throw the sessions across. We have this going on. We have this going on. Do we have this going on? Let's see if they're still in there. No. Okay, close. We don't have this pushed to the chart. I don't normally save all this stuff because I don't usually expect IRT to take a dump while I'm out of the room. We have another VPOC migration here. That's just happened. It seems like that was a while ago, doesn't it? I'm a bit apprehensive about what's going on with my data here now. But that trade was definitely, okay, we're getting up to speed. Let me just save a couple things here. Let me save this. Okay. let's see here. We didn't get to the trigger right here. You see that? Which is also now back where it belongs. Over here. We did not get up to the trigger. And this is now a problem for me because I don't believe in diddling in the middle, right? And I have a thing called meat on the bone or range requirement. So if I got a trigger up here, what is that? That's 29, 24. Well, that's 5 handles. That's pretty close down to this POC, right? And the POC has been migrating up, granted only once. Does that suggest something? Maybe. So let's see, 1 trade in, 1 trade stop, right? Right here. And stop quicker than you can say don't. All right. No opportunity. No opportunity as yet. Mean reversion people are all tickled to death, aren't they? Shortness high, picking the top, or more likely right here, outside in. Great, lovely, lovely. I'm gonna water up here, I think. I don't know. Is this gonna zoom up and get us trigger? I don't know. I'm quite sure that I haven't been able to identify it, but I'm pretty sure something happened here in terms of let's make sure nothing happened over here. Okay, both 2 lot, you bet. Let's make sure that well, we're gonna get a stop here in a damn second. We're gonna get a trigger up here, I think. Aren't we? I don't have a B signal yet to the downside. I have an A, but not a B. And I don't know what to tell you now. That would be a trigger if there were a B in place. There's not a B in place, and so I'm not taking the trigger. And I'm pretty glad about that. Got another A, however. This is definitely something. Definitely a work in progress, huh? I work on these systems, backtesting at night and in the morning and everything else at length, and I'll go through all of that pretty quick. Now, you see, here's where these signal markers get out of whack. Did you see that trigger fire? And here's another problem I have just noticed here. On my stop, I don't have a trigger. That is an error on my part right here. That was not a trigger. I don't have a trigger in the signal. I'm going to have to review this because of the world famous data fell on its head story. Now will I get a B and then I get a trigger? Well, I don't know. Don't have one yet. And no trade from the system. And I guess I have the system in here now, right? I hope. This is why I'm trading the micros, incidentally. In case you weren't able to figure that one out. This needs to be happening, and it needs to be happening consistently and correctly before I'm going to get all excited about, oh boy, let's take a bunch of real money trade. Let's take a bunch of mini trades over here. There's the B. If we can maintain the B signal now, that needs to be on the close. Nope. Get down there. Come on. We need to get down there and close that in the pullback zone. That's the rule. If we do, we get a B. We pull up here to the trigger. Now it won't. Now it's not going to happen. There's a trigger. You see, that would have been great, wouldn't it? But we don't have a B. Now we have a B, but it isn't closed. And we don't have a trigger. And this is all just pretty volatile price action today because of the light liquidity. These are those kind of weeks I'm just glad when they're over. Now if we can get a B signal and it'll set, and then we get a trigger, I'll go short. It's just, oh, there we go. We got something went on there. There we go. I guess that's a short. Yeah, it is. But it happened by the signal without me catching it over here. Too quick. If we get up here to the trigger again, it picked this trigger and then picked the B. So on the same bar, which is not handy for me. And now I've missed that trade over here, and it's trading off the right direction. So, frustrating. Mega frustrating. So I jumped the gun and got a stop. I didn't jump the gun and I'm missing out. Isn't that cute? I don't know what to do about that. I don't know exactly how to make it anymore. I've got to get this all consolidated into one setup and one charting, whether I'm trading on IRT or whether I'm trading on Bookmap. Yeah. And you see the thing about the price lines here. Okay, yeah, there's the B, there's the B, there's the B, there's the trigger, and wouldn't that have been beautiful? But that's not the signals. And the reason for me saying that is, this is not the close. This is price action. The 1 minute close is different. Now, if I get up here and I get a trigger, I'll take it, I think. Kind of disappointing, but if I get a trigger up here, I'll take it. Because I have the signals 1, 2, and A, B, and I just missed the trigger on the first go around on the signal setup. And still not up there yet. I don't like trading so close to the POC like this. I find that a bad idea. Boy, look at that. Pretty close to the trigger, huh? Man. Volatile market, look at there. Still in this trade. Still in the trade as taken by the system. And had I gotten here or here, I'd be tickled to death. But guess what? I'm not. Disappointing. The one trade I did take, I got spanked immediately. Not a pretty picture. This is pretty, something goofy's happened here too. This isn't, something's wrong with this rule. I'm going to take it off because there is no trade that's just one target. Unless I was doing some what ifs last night and forgot to reset back to this usual suspect. And now what are we doing here? Well, now we're just trading all up and down around the POC, which is not a good thing, is it? Missed that short. Will I take the next one? I'll probably have to, because that's the way that's the way it goes. Assuming we get into the trigger zone and up around this IB again. Wow, and I missed that one. Pretty quick. It's pretty fast with Bookmap here. That's kind of a problem for me, as you might be figuring out.
Order submitted.
Well, let's see what happens to T2. Now, boom, risk neutral scale. Okay, so it's pretty plain, isn't it? Entry, T1, break even goes to stop. Do I move my stop? No, sirree, Bobby. And now I need to start thinking about trade management, and that's where I seem to fall on my noggin here now and then. And I've tried a bunch of backtesting, which I'll show you about later, but do I want to trail up and cover that stop without moving my target down? Damn, these are all the things that I have to worry about here. And what I'm going to do at this point, which is not something that's proven out as far as my backtesting goes, and that is to trail up to here. So that would balance out the stop loss. And I don't know. Typically, I never move anything, but I'm tired of this.
Order submitted. Order submitted.
So there we go. And let's see what happens here. Okay. I'm just winging it. Winging it here. I could trail to the swing high, which is kind of the usual thing to do. I'm going to keep my T2 here just above the open because that is a pretty big line in the sand as far as I'm concerned. And we're just, we're just pretty much holding on here, aren't we? I have no idea what may or may not happen. Neither does anybody. Let's look at the... Oh, there we go. Okay, so there was a big pop on for some reason, and there's the T2 exit. Okay, so there's the T2 exit, and we are plus 1 tick. Oh, baby, that's gonna ruin the expectancy. But a stop and back in to profit. What should I have done? Should I have trailed up tighter? Should I have taken them off here at the bottom of all of these? I don't do that, and maybe I need to. Now, here's what's going to be frustrating, which happens frequently. It stopped, no heat whatsoever, and it will probably go well past T2. That's frequently what happens. But this is a goofy day, huh? And this is a holiday week. Okay, I'm flat, so there you go. I'm up. I've got a resounding profit of 1 tick. That's $1.25, baby. That pays the commission one way. On a 1 lot. Remember, this is a live account. I've really got to, over these next few days off, I've really got to come up with a risk trade management plan that's valid. A lot of different ways to look at them. A lot of people, okay, once you get to a specific place, like say here, T1 plus whatever, then you trail up to T1, which is essentially what I did. A lot of people say trail to the swing high, which would have been down here. And this is going to go down to the target without any heat. Here's the entry. Another way to look at it is you trail it up to scratch, right? So it's a straight up scratch for that particular trade. Yeah. Woulda, coulda, shoulda. Yeah. He probably lied and cut its head off, Richard, nothing would surprise me. And here we're going to go to the target. Sure as damn world. You see? In the vetting process for my trades, when you're vetting a trade setup, you don't ever move anything. Obviously, when I'm using the backtest engine in IRT, it's all done by the computer, so there is no possibility of intervention or discretion. Typically, I don't move them. I scaled it up, and what's going to happen? I'm costing myself profit and then some. Hindsight, baby. Clear as a freaking bell. Ding dong, ding dong. Now, I'm a little bit puzzled as to what the hell happened over here, and I think I know. I'll show you what I think I know happened, in case you're curious. And I'm going to be real skeptical today about entering again because this is light volume, increased volatility. This was a price check at aisle 3. No, this was just for the overnight. What I think happened right here was a 2-lot taken out scratch, because the last back test I did, which I can even prove to you, was right here. The last back test I did was a scratch with the new rules, which I changed over here. Now, so I'm not lying. You know that already, huh? What I think I did in the old guy is sleepy kind of deal is did not change that. And let's check. What will happen here, if I'm correct, you will see T1, you'll see stop at 12 ticks, you'll see T1 at 12 ticks, and then you're going to probably see T2 at 12 ticks, which is incorrect. Uh-oh, who's your daddy? I forgot. Now, what this is 1-to-1, because I'll show you that later, but what this should be now is 48 ticks. This is where I do the changing for position size and trailing on the what if story. 12 tick stop, 12 tick T1, 48 tick T2, no trail, 2 lots, no trail plus entry. Save. So you see, now you understand why I'm not trading this thing live? I'm a dunce. Modify the rule, save the rule. Okay, look at there. That's what would have happened now. We would still be in the trade. This is the interesting part about the backtesting, right? Oh, I'm sorry. Son of a bitch, I didn't show you any of that. Well, what I did was, I will show you. This was 12 ticks. So it was a 1-to-1 relationship. I changed it back to the correct one. And you'll see that it's now recognized that. And we are in drawdown. Are we going to get a stop? Maybe. We didn't get to our T2 yet, all this way. And yeah, okay. What I showed for confirmation here was that last night I was doing these 1-to-1 things here, and surprisingly, it's amazing. The biggest net profit and win rate and loss rate minimum, obviously, and good expectancy and R multiple and profit factor is a 1-to-1 risk reward, which, is hard for me to even say out loud because I didn't think so in a million years. And there was our stop. So this was a scratch. But this was the trade, if taken correctly at the time. Now, we'll see what else happened. And maybe I can remember not to redo that. But that's how I do the what ifs. That's how you do that's how you back test and you vet a trade. Scratch plus a tick. Left something on the table. Here we go, loop-de-loo out the top. Not new high yet, but, you know. Oh, and we're on an A and a B. So now am I going to take the trade? No, I don't think so. We don't have a trigger yet, but we do. Oh, no, we don't have a B anymore either. Okay. What's the way these things work is there are nuances that are important to the rules. Open, close, for example. If the B signal needs to close within the pullback or trigger zone. I think it's closed, or maybe it's high. And then the trigger comes back down, picks that up. Also is important for an A is that the previous bar to the signal bar has in this case with the IB high, the open has to be lower than the close. So in other words, I'm trying to infer or identify directional trade. And, you know, now we're going out the frickin' top over here. Like, who knows what happened? I don't know. Trump lifted the tariffs on all those nasty penguins? What? I don't know, you know. Sucks. We got 235 of them sitting up here at the 44 handle. Whatever that means to anybody. I don't know. Let's see. Well, 44 handle. What is there? Boop, boop. That's a high volume node. We're over yesterday's high. So what are we doing? Market goes down to go up, I guess. Mean reversion. Be really careful now that you understand this 3-tick spacing on the price bars here, because I got it opened up to see what's going on. If you're trading mean reversion stuff outside in, and that's a vetted trade that you have, it's been a spectacular day. Congratulations. I'm trying to stick to my guns and trade one thing at a time. Scratch, by the way, of course. And let me point out, if you're new here, this indicator, which is coded by Chad Payne at IRT a long time ago, this is the trading system, the TSY indicator, I think it's called. It was built thinking about only one position at a time, one lot or target at a time. So here is T1, profit hit. That's 12 ticks positive. Risk neutral now. Here's T2, or the stop for the second contract. But this old indicator doesn't know or doesn't look at the total number of contracts and the internal profitability or loss itself. So it's showing negative 12 ticks up here because it thinks this is the only one we had on. It didn't add in this. This should be 0. The same way with winning trades, it only shows 48 ticks. It doesn't show 60. If that makes sense. Well, we've got a whole bunch of triggers going on, but no B, thank goodness, because I don't think it would be particularly a particularly good trade. Now, this is where my bias comes in. The system would take a trade, case closed. I look at this and I think, well, I don't want to get long up here. And that's okay, good. The system doesn't think so either. That's why I keep the system open, because I want to see what it's thinking. And here's what we've got going on over here. Now, if I wanted to really get up, here's something funny. Watch. Now, we're still trading. I guess I won't. What I was going to say was watch this. I think this is the quickest way to do this. There you go. Candlestick chart. Book map. With some volume bubbles floating around out there somewhere. I've actually thought about this because these are 1 minute candlesticks, just like I have 1 minute bars over on the signal. And I can see, because I know, okay, these are closed down here, open up here, close down here, is closed down, open down here, close up there, right? You can tell whether they're in or out or what they're doing. But if you're going to do that, why not just use IRT and to hell with it? Now here we have a B, okay? Here we have a B to the upside, and what would this mean? That's because this closed within the continuation zone. If this trades down to the trigger, this would signal a long. Let's do it. Let's watch this and see what happens. Here's what I'm talking about. There's the A. There's the B. We're coming up to a trigger here. Oh, about as close as you can get, huh? There's the trigger.
Order submitted.
So there's T3. Whether that's going to work out in our favor, I don't know. Kind of funny seeing bookmap with only candlesticks on it, isn't it? And there's the break-even trade. So there's trade 3 risk neutral scale. God damn it. So worst to worst, we're going to be we're going to be at we're going to be flat. If I trailed up here right now, we'd have $115 locked in, baby. Woohoo! And maybe we're going to get a pop. Look at there. Now I need to stop and think about what I'm going to do for trailing up. For my risk management story, remember that? So here's 10. 34. If we get up here to T2-ish, I guess I'll trail them up. To here, I guess, huh? Hard for me to figure out bookmap with this. Oh, and I did something different. I did something wrong. I'm going to get right up here to break even.
Order submitted.
And I'll tell you why I did that. This was not a trigger according to the system because of the directionality of that trade. But let's see if we get up here to T2. I'm just winging it here, boys and girls, in case you can't figure that one out. I've never... I'm not sure how stupid it is to be looking at bookmap and trading candlestick charts, huh? That's pretty funny. That's pretty funny indeed. So I could jump up here to T1 now, to up to my T1, and I'd have, $30 locked in or whatever it's called, which is nothing, of course. But will we jump up here and get the T2? Never know. Never know. We need Trump to say something wonderful happened or somebody over there. Old Blondie Puss is, what time is it now? It's 10:30. Okay. Pretty funny. I've never tried this before. It's so strange to see bookmap without the heat thing going and the candlestick charts flopping around. Isn't it? Strange to me. Get up there. Come on. Show everybody who's boss. Get up there and get this thing out. Let's go. Not down, up. I want to use the up word. Use the U word here. Attaboy. I think I'll trail up to this one here too, just for the hell of it. Once we get above this candle, I got no reason. I mean, I'm just winging it here. This is strictly discretionary hocus pocus going on. But hey, are they going to get up there and take out the new high? If they get up to those highs, it's very possible we're going to get a pop to that 43.
Order submitted.
I'm just doing that for the hell of it. It makes no sense. I'm just trailing it. That is certainly not any kind of a methodical trade management system, but it's, yeah, T1 based on the difference to up here at the high. That'll be my excuse. That's my story, and I'm sticking to it. I'm pretty surprised about that. The backtesting discovery about the one-to-one methodology and the one-to-one risk-reward thing. I'm really surprised about that, frankly. Come on now, be big shot. You guys know you want to get up there and get that high. You don't want to get into that low volume node again. Come on now. Everybody out and push. Who's not pushing? Come on. Richard, are you pushing? Everybody out. Everybody out of the truck. Oh, big buyers in there. Big buyers in there. Attaboy. You're a big shot. Let's go. Take that high. Come on. Show them who's boss. Get up there and smack that thing. Get up there. That's not the up there I had in mind, actually. I had this up here. I had this up here over here. Atta boy. Come on. Well, it is what it is. I couldn't tell you. I have no clue what's going to happen around this little distribution here. Yeah, up to this high volume node. Remember, this is from the micro composite. And here's the RTH high today. So don't forget, we've already been here. We can't see it because I'm all screwed in over here, but there we go. Okay. T3 stop. T3 exit. Now it's probably going to pop the other way, huh? Okay. Well, I was able to realize 26 ticks. Oh boy. But hey, that beats a sharp stick in the eye, doesn't it? Oh, it's gonna go. It's gonna go too, isn't it? Yeah. All right. Let's do what I always do here now. I'll leave this on just for grins. Okay. Now I'm going to show you how I do this. Okay. This shows all the statistics, shows the trades. And I've now locked her in and guaranteed it, baby. So there you go. There is about as transparent as you're going to get, I guess. And I realize that the one thing I'm not doing here is showing my broker statements because I haven't figured out how to sanitize them exactly yet. Go get them, Lucky. And we're going to take this IB high, and I'll bet you we get to T2 before this mess is over, which in my normal world day trading, I would have left the stop here or maybe brought it to here. Maybe brought it to break even after T1 and then just ride it out. And you'll see what would happen if I'd have done that on this one. That's why I use the what if story on the backtesting. And the only way I know to do this, with any kind of method, logic, or process at all is run the backtest the way you've got it. Then you make one change. Okay, I'm going to trail. At T1, I'm going to trail to break even. Then you run the backtest over the same data. Is it better or worse? And that's exactly what I'm doing right here. 20 backtests of 500 days, 490 something trading days. Here's the number of trading days. Number of trades taken, on and on and on. Expectancy, win rate, average, loss, average, win rate, loss rate, expectancy, multiple, profit factor. And now I've just come up with a new metric. I got to thinking last night, well, this is really stupid to be pulling these back tests without commissions, because especially with minis, that can be substantial. So I've added the gross profit and commission, which I'm going to rerun these, tonight and do. And now here we go for the T2. So I got anxious right here instead of leaving it here. And I would be getting T2 out of this thing, 60 ticks instead of 26. Now, this is 26 net, because you remember that there was 30 or 24 loss. So that's 50 positive on this trade. So there you are. And we're going to take out T2, sure as the world. I'm kind of liking, I hate to say it out loud, but I kind of like this just plain old chart here with my zones on it, just putting along. Let's see what happens if we throw let's throw the heat map back in it. So there's the liquidity. Does that help or hurt? I don't know. Well, everybody knew there was liquidity sitting here, didn't they? Because it's right over here in the book. Here comes T2, sure as the damn world. Let's go. T2 right there. I'll bet you we get it. Next push. Next candle push. Everybody out. Bam, there we go. There's T2. So that would be 60 ticks off this entry. Had I not done the second trail to here, to a little bit more T1. But you obviously don't know that. And obviously I'm just more or less playing today, kind of. But these are things that you have to explore with backtesting and verify, then vet, and then take, every time. You see, every time I get a signal, I take the trade. Case closed. Do I regret moving my stops? Yes and no. I have to really work that out. And it's not a matter of how I feel, what Hyde has to say, what Monkey Boy thinks. It's got to do with the data. What does the data say? Is it more advantageous to, here you are, right here. Here's 12-12-48 at T1, trail to break even. Here's 12-12-48 at 20 ticks, trail to plus 12. Okay, and on down the road. And I will point out that the highest probability of winners and losers here is 1-to-1 right over there. Now I think that, I'm pretty sure that once I put the commissions in the gross profit, okay, but the commissions in there, it's going to have a big impact. This already reflects the net profit without commissions. When I put the commissions in here, going to be a big difference. But we'll see. And now I'm going to go water up. Okay. Pretty funny. There we go. Pretty funny. I gotta say, I like it. Much as I hate to say that. That's pretty funny. Okay, let's look at this. And now let's look at this. And then let's look at this. Come on, mouse. Be nice to me now. Oh. What do you think? I don't know. What do you think? Yeah, Richard, I didn't think quickly enough, but I guess I should have said, well, I guess it doesn't matter if Trump pardons one more turkey. he's pardoned enough of them lately. Yeah. Plenty of turkeys pardoned over there this year. Now, this is a really good example of why my focus needs to be, in addition to the proper backtest idea, the trade management. The old let the winners run and cut the losers short thing. I got no problem cutting the losers short. It's the winners run, being able to milk these out. It's so easy, you know. Well, I don't know about easy, but hindsight is clear, right? And that's the stock and trade of the internet guru guys. But you know, there's 270. 270's been parked out here at the 50 handle for a long time. I realized I had missed that first stop when I did this snap a minute ago. I'm going to make sure I got them all recorded. What do you suppose that was? Well, this has definitely been a day off the reservation here for me. Just looking back at it, the signal trade I thought was right here stopped immediately. Here, stopped immediately. Here, T1, scale, right at which covered this. So now we're sitting flat. And then we got along here, signal, in my opinion. And you can see that it's still working out magnificently, but I mismanaged myself up here. Not crying about it, but, you know, this would now be about 100. You about add about 100 there in front of that 26, and you'd be about right. Only signal trade. Hmm. Let's do this sizing thing here. I got to make these tables because it's a pain in the butt. For me. Nope, I don't want to do that. I want to do that part right there. It is within specs, you moron. And it's a, so the first one was a signaled IBC. And it was a minus 24. 2 lot. 1.25. 24. I don't know how. I got to turn this into a table. These things aren't working. It makes me nuts. I don't know why it's doing that. Now I'm going to just do this, I guess. No. And this one is the second one. Let's look at the stats down here. The second one is 25 ticks positive. So that is 25 ticks. And it's 2, and it's 1, and it's boop. And it's boop. And it is 13. And this one is, gotta change these into, I gotta change this to tables. Then you don't have to do all this stupidness all the time. And this one is, oh, no. Yeah, 25, right. Wait a minute, what the hell's going on? Again, is that only all I got was 25 ticks? Huh. Is that right? Oh, yeah, that's right. Well, that is dumb. That's even dumber than I thought. I about done myself. I'm dumber than I thought. Oh, this is wrong. That's for sure. It's going the wrong way. So this math is wrong. How the hell is that not working? This has got to be going down. These two over here have got to be going down. I'll have to look at the math later, I guess. So that's how I do the scale up. The idea behind this is, oh, you're not looking at it anyways. Never mind. How is this not working? Convert to table. Okay. What the hell is all of that up here all about? Well, boys and girls, ladies and gents, I just converted this to a table, and now I'm going to have to go back and do all the stuff I need to do here to convert this properly, and then I don't have to worry about all this stupidness every time I add a line. But I'll do that later. Remind me. Well, let's see. Let's get back to this boy. Well, yeah, I'm pretty glad I didn't. I'm pretty glad I didn't take just sit on this long right here. But woulda, shoulda, coulda, hindsight. Was that a FOMO moment? Maybe. Let's talk about it. Monkey boy here, the monkey mind. What in the world is the monkey mind? Well, some people refer to it as hide, you know. We've evolved as a species over thousands of years, and a lot of the behavior that's come down to us through evolution and, you know, selective breeding is served us well. You know, it's saw to it that we survived to here. In other words, 1,000 years ago, out on the plains somewhere, if two fellas were moseying along and they saw the grass wiggling, and one guy who was risk averse jumped behind a tree, and the other guy who was not risk averse went over and kicked the grass, one of them might have ended up something's lunch and did not pass down those genes of risk seeking. The one hiding behind the tree survived and was able to pass those genes down. That's how selective breeding, cattle, horses, dogs, whatever, that's how it works. In our case, those genes and tendencies that kept us, God, look at this thing go and I'm not on it. Man, oh man, this is the difference between Rod and I right here. Anyway, those things that kept us alive way back when and that served us well or not, don't do a good job for us as traders. FOMO. Desire to be right. Risk aversion. All that stuff is contrary to successful trading. Now, because it's been baked into us for so long, in my opinion, and I'm no shrink or anything else, we're never going to get rid of that. You're never going to control yourself and eliminate that from your thinking. You are always going to feel FOMO. You're always going to feel risk aversion. You're always going to want to chase that trade that got away. I think those are emotions that I don't think we're ever going to get rid of. What you must do in order to be a successful trader, in my opinion, is recognize, be continually aware of your state while you're trading. Don't be distracted. Don't be thinking about this, whatever else. And when you notice those feelings, when you feel that adrenaline rush or that dopamine blast, you don't act on it. You recognize that Monkey Boy is back and you don't act on it. That's my opinion about the whole psychological story of trading. So when I say Monkey Boy, you know what I'm talking about. And yeah, am I bummed that I did this and not left this here and I'm not still riding this all the way up? Abso-freaking-lutely. Absolutely. Would I have brains enough, or would I have had the foresight enough to be moving this target up all this time? Likely not. I would have likely seen this come down and this go back up and take that out, and I would think, that's great. And I would have taken that target, and I would have thought myself a genius when this happened. Because this is the stock and trade of internet gurus that don't really trade and make a living. But it's so easy to look back in hindsight and the rearview mirror, and know exactly what you would have done, and you'd still be long up here, and you'd be buying a new Ferrari, or a new wrap Lambo or something. You know what I mean? So a good way that I have of shutting Monkey Boy up of these kinds of feelings is the recognition and the awareness that the market is a continual stream of opportunities. This is one trade out of thousands of trades that I'll take in my lifetime. Am I happy that this worked out okay? Yeah, not as happy as I would have been up here. Do I need to think about that? Yeah. While I'm in the vetting process, I never move anything. I never move a stop. I never move T1. I never move T2. Would that have paid out perfectly right here? In spades. Okay, so I'm out clevering myself with this risk management idea. Anyway, I try to be sure that I recognize that the market is a continual stream of opportunities and that there's no such thing as a missed opportunity. There's only the last or the next opportunity. Hey, Dan. So yeah, there you go. Yeah, you missed all the fun and games with you missed all the fun with the turning Bookmap into a regular chart and trading it. Notice that I pulled off the session levels, put in only the trading stuff. And at one point, which I can show you the chart over here rather than redo everything. And wow, man. And I traded that. I took the heat map off. I took everything off, candlesticks and the lines. Thought, well, let's see what happened. Worked fine, by the way, incidentally. Wasn't a bummer at all. In fact, got this one and then got that one. So the originally signaled trade was just an immediate stop, straight up, kabam. And I took it, of course, because that's what I have to do. Is this Monkey Boy getting all shook up? He's jumping around here, throwing furniture and everything else. Because look at this. What is that? Well, that's 37 to 67. That's 40 handles from here. So here we are. Where am I right now? I'm sitting on a positive 26 ticks. Ridiculous, but hey, it's better than 26, sharp sticks in the eye. What does that look like over here? This is a pretty good tool for bookmap. This is the statistics. Flat right now. Overall up above us. 66% win rate. 33% loss. That's pretty obvious. And here's the trades and how they panned out. There you go. And Dan, this is one of those, this was a day of raised margin. If you've got the email. Here's a list you might want to look at or copy or do something too. This is a pretty good list. This came out from AMP last night, showing the revised schedule for some of these important reports, because now they're, because of the world famous, we're all going to buy cigarettes back there in DC. And then here was the associated margin increases for the PPI right there. So it went from $40 to $600, $400 to $5,900 day margin. And let me see something. And at 7:47 this morning, I got the margins have been restored to standard day rate from AMP email. I could copy it if you want to see it, but you'll have one too. So that's how they do it. So the big thing that's important about that whole story to me, that starts at 1,700 last night, the elevated margins. So that's important to know. They keep that margin elevated all the way across the overnight session through the report. And then a little while after the report, they lift it. But it's the overnight when I think you could get hammered pretty easy if you weren't aware of it. What's over here in Triggerville there? Let's just look. Wow. Wow, good man. There you go. Or good trader. I'm assuming, man. Maybe Danny, maybe you're a gal. I don't know or care. Good for you. Yeah, that's what you got to do. Be sharp. Nothing worse than getting hammered over some stupid mistake like that. You know what I mean? Trading is tough enough without tripping yourself up over silliness or, technicalities like that. Important, very definitely, but, a technicality. Nonetheless. I can't imagine that there'll be another trade present itself. One thing that keeps rearing its ugly head, oh yes, I haven't figured, I just converted this to a table and it's got its knickers in a freaking knot. and it didn't pick up oh, it did. These are the titles for these values. Yeah, this will be better in the long run, but I'll have to mess with it. I'm not a Google Sheet guy, but I do not have any Office products on this trading machine. By the way, in case nobody notices or hasn't, I share the complete monitor. You'll see at the bottom there's any programs that I have open, plus the computer system clock, hours, minutes, seconds, and the date to tie back to the bookmap and to IRT just for accountability and transparency. Yeah. So anyway, I'll fuss with this later. I'm not in the mood at the moment. What was I going to say? Let's see what's going on over here. I guess here's the turkey being pardoned. And he's thinking, oh my God, it smells like turkey shit. This is the one pardon he's pulled that I think that I agree with. Rather take all those 6,000 Jan 6 guys and chop their heads off. I think that'd be a lot better. Huh. So I wonder what this is for. Why is he saying this? So they're threatening they're going to slide over and bomb America or what? I mean, who the hell knows? These guys are so busy. Misdirection and BS. That's the big one. Hassett. Well, that shows you what the market thought about him. White House senior advisor. Oh my God. Wow. I don't think anything about politicizing the White House is good. We're just keep rocking to the top, and I'm avoiding look, and I'm going to turn that screen off, I think, just so I don't get pissed. Look at us go, boys and girls. Look at us go. Well, I hope that somebody's sitting on them long and not a doofus like me. I was so excited, I guess, driven by or motivated by overcompensating for the stop. And then remember now, at this point right here, not to be a rearview mirror guy, but here's what we were looking at. High of the day. High of the day. In a rotational day at this point so far. The giveaway where I dropped the ball, I suppose, in hindsight, in that rearview mirror is, here's the migrating VPOC, the full session, right? So what does that mean? Well, that means that value and price, what is the POC? We know it's the price at which the most contracts have traded so far in the session. What does that mean? Well, that means that most of the traders figure that this is a reasonable place to trade. They're happy to trade here. Willing to trade here. I don't know about happy. First it was down here. First it was down here. First it was down here. Now it's back up here. So what's happening? It's migrating up. This is the whole concept behind the VPOC migration setup, which, as I've talked about it a gazillion times, I can't get in my head.
I can't figure out the parameters to justify that, but it's so obvious, isn't it? Here's the yellow brick road. How the hell can you miss that? Well, this is a tell that are they going to continue to take it higher? I was scaled risk neutral. My move should have been, I guess, in hindsight, break even or entry, break even, and then see if we take the breakout run, which you could say we did. Now, also, as I pointed out a few minutes ago, here was T2. So when T2 was taken out, when T2 was hit, right there, I'd be pretty happy, huh? And when that, and when that happened, I'd be thinking I was a genius for taking T2. And then, maybe not so genius when you look here. But hindsight, rearview mirror. Boy, I tell you, there are a lot of people on the internet and YouTube that do get paid for trading in the rearview mirror. In hindsight, I just am not. I'm not a gifted enough bullshitter in order to do that. I guess. And I'm not a. And I am not, a good-looking enough little gal with a big, cute figure to get away with it either. If you know what I mean. Yeah, the system for me is a huge deal because I think it's really important to eliminate as much discretion as you can. The trades I took were system driven, and you see how poorly I did with discretion on trade management. I'm just talking about me, right? Rod makes a frickin' killing. He makes $50,000 a month. He doesn't trade a specific system, but we do trade similar setups. We trade more size. As a matter of fact, Rod is when I was talking about vetting a setup and what, Rod said, well, what? Here's a suggestion. My IB failure trade is the trade price comes up to takes the IB, pulls back between 3 and 5 points, trades back towards the IB again within 1 point, and then sells off. I call that my IB failure. I thought, that's a good idea. So what did I do? I coded that exact trade, and that's what you see right here. And then I thought, well, why don't I flip that around and have that be an IB continuation trade also? And that's what we have. It was an opportunity for me to figure out how to develop the rules that fire sequentially and all this different stuff, but the premise is the same. We take the IB, we trade into the pullback zone, we trade up to the trigger zone, and we sell off. Here's a better way to look at it. We take the IB, we trade into the trigger zone, we pull up to back to the in the pullback zone, and we pull back to the trigger zone and we get short. So that was basically the derivative or the derivation of the thing. And that ended up manifesting right here. This is the IB trading system, long and short, IB high, IB low. It requires, in order to run it via the computer in a backtesting engine or live, you've got to have each and every rule specifically spelled out, including what do you do at the end of the day? Well, if it's within a specific number of minutes from the end of the day, which I can set using VPounds, it closes all the positions. That kind of thing. You got to do those kind of things that you might not have thought about. And there are some certain things you have to do with cadence to take T1, and then T2 and that kind of thing. But other than that, once you figure all that stuff out, then I have it down here pretty simple. I changed a bunch of rules yesterday night. Technical stuff like trying to see one here. Well, there used to be one that was for the IB statistic, we needed to have the signal bar needed to open below the IB and close above the IB, which this particular bar today did. But many times we'd be on the IB and there'd be no signal. And I got to thinking, well, let's see, maybe that doesn't really matter as much as the high came through there. So I changed that. The previous bar signal remains the same. It's got to be open's got to be lower than the close, so that we're trading up momentum into the IB. And then, the rest of the signals similarly. Those are the nuances that can be tweaked. But the way you have to do it is, if you're going to be at all systematic about it, you run a backtest. Wrong thing. Sorry about that. Football. You run the backtest. Then you change that specific rule. Then you run the backtest again. Did it improve? Did it fall on its ass? What happened? Now, this particular set of backtests here are what ifs for, trailing stop, break even, that kind of thing. And these are the changes I made in the rules. This is where it used to be. If, the open was lower than the IB high and the close was greater than the IB high. Now it is the open is lower than the IB high and the high is greater than the IB high. And these are the other changes I made yesterday. So it's a continual work in progress, and the only way that I can keep track of it in my mind to have a continual positive progression is to do it like this, where the old way, then one change in the new way. Okay, then one change the next way, you know what I mean? That's the only way I can figure it out. And that's because I'm old and unorganized. Oh, there you go. Good for you. You can easily code. Yeah, I mean, if I have no idea about backtesting on TradingView, I think it's fairly straightforward. I've not really ever used it, but these rules, these are just indicators coded simply on this chart, and I'm sure you can do the same thing in TradingView. That's all you got to do. The IB, the continuation zone, is between 3 and 5 points above the IB. The failure zone is between 3 and 5 points below the IB high. And the trigger zone is 1 point either side. And it's just flipped on its head for the IB low. Simple. There you go. There's the secret trading system. A gazillion dollar deal. You owe me $1 million. But I'll give you a Black Friday special. $2 million. And this is just a work in progress, but the key word I hope is progress. not spinning around in circles, which I don't believe that I am. Still there? I don't expect any trade to trigger this afternoon now. It's, oh, Jesus, I was going to get out at 1 for my midday thing, or at 11. Now it's already 12. Holy smokes. Well, I do think I'll get outside. It's about 24 here. Which is about 75 for all you effers out there. Get some sunlight. Remember that the most critical tool you have in your trading kit is you. You know, you take all the expensive time you put into monitors and keyboards and software and trading this and something else that. And two things. Your eyes take all that data in and your brain processes it all. And based on that, you make financial decisions that affect you, your family, the rest of your life. What should you take good care of, I think? Rest your eyes. Make sure you're well rested. Make sure you're well hydrated. Make sure you're not on emotional tilt. When you come into your trading office, you know, little meditation, calm breathing before the day starts, through the day, always stay aware. You know, Mr. Hyde or Monkey Boy comes sneaking in the window. Yeah. There you go. Shot myself in the foot today. Pretty disappointed about that. I really need to. This next 3 or 4 days now tomorrow will be a light day. I'm going to be streaming, and Thursday, no, of course. Friday, I might come on, but I typically scrub the data. I don't like those half days in IRT. It gets everything goofed up for me. But anyway, we'll cross that bridge when we get to it. But I'm going to really work on a long and hard, give a lot of thought to the trade management side of life here. Because I'm maintaining, first, I don't have any problem with over trading, you know, blowing up accounts and that kind of crap. I know about risk management. That's why I'm on micros. That's why I have the scale up tool. What I need to do is increase that now by my trade management, you know, instead of being 26 points up over full loss, a full stop. There's 26 ticks over a full 24 tick stop. So what have we got here? We got 50 overall 50 net ticks. I should be 150 or close to it. I don't know. Trade with the ATR. I don't know what to think. Speaking of that, what is the ATR today? Did anybody know? I'll bet you money the volume is light. I'd say around 70%. Oh, I'm wrong. Taco Brain, 98%. Looky there. And the ATR has come down from up here around 8 plus down to 275. So it's in a more manageable, a less volatile range down here. Understandable. We're going into the noon hour. Yeah. Oh, look at here. Look at these string of singles we got along here. My. What have we got going on? One time frame into the upside and a big string of singles below us. If they get into that, boom. One time frame means higher highs and higher lows, essentially, in market profile. And a string of singles is all these single prints running up through here. Well, here's a little dribble, and then here. Old market profile stuff that people would think was so important. And maybe is. I don't know. I mean, they made a lot of importance out of those kind of things. Jim Dalton still does. Yeah, that's for sure. It's a real light week. The definitely the B squad is on the field, I would say. The JV team is out there usually. It's kind of like the holidays, Christmas, and that stuff. It's a real good time to watch the market. Don't participate if you've got a very definitely vetted trade, and spend your time vetting a trade, improving your process through backtesting. And I know that TradingView has a what do you mean higher means higher? No. What that means is, what is the market? What is the context of the market today? Well, it's higher highs and higher lows. It's an uptrend, and a substantial one. But that's what higher highs and higher lows means. And you can have what a lot of people hate, probably me included actually, is like a megaphone, where you have lower highs and higher lows. Prices consolidating, coiling, getting more compressed, which typically would end up with a big explosion one way or the other, right? And on the other side of the coin, if you had a big, let's go see, a big losing day, you've got lower highs and lower lows. Context is down. In a day like this, which direction do you think is more advantageous to trade? I would say up and to the right. Yeah? Do you think that trying to call these tops was a good idea any place? You'd be amazed at the number of people that do think that is a good idea. That reverts back to Monkey Boy and his overwhelming desire to want to be right. I called the top, baby. I called this top. And of course, the last 300 times you tried that and you got salt pounded in your ass, you just forgot about it. That's one of the things I forgot to mention about Monkey Boy. And it's it's one of those built-in human wiring problems, issues that we have as traders. Humans remember the one time. The one time you move your stop and you don't get, and it works out in your favor, price comes down and then goes up, you'll remember that for days. The 100 times you move your stop and it costs you double, you won't even think about them. I mean, those go out of your mind. That's a human trait. Another human trait that's come down and was really important for us to survive long ago is pattern recognition. You look across the desert out there or the plains and you see a gold and black stripes, you think it might be a tiger or, and that's probably the truth. Unfortunately, now we have a confirmation bias, which is our mind tells us we're seeing a pattern, and our confirmation bias allows us to justify that. One of the key examples of that are like Fibonacci's. there's a Fibonacci every 15 ticks or something like that. Well, it's pretty goddamn easy that you're going to get a turnaround on one of them. The market goes up and down. It trades up and down all day long. It's a binary event. And I'm not saying anything about Fibonacci. If you love them and you want to trade them, Merry Christmas. But it's confirmation bias. That's for sure. And remembering the good stuff and forgetting the bad? Absolutely. There's a theory that if women remembered the pain of childbirth, the human species would have lasted one generation. That's probably the truth from the looks of it. Yeah. Any kind of confirmation bias. And again, as I try to say frequently through these streams, this is my virtual trading journal, and this is what I'm doing and the way I approach it. And I'm completely open and transparent about how I set my stuff up, how my signals are, what I trade, all mapped out right in front of your face. And very definitely, this is not a my way or the highway thing. If you have a system that trades Fibonacci's and you're consistently profitable, absolutely do not change. And let us know, throw something in the chat. And how do you do it? How do you go about it? Share your stuff. You see, I share mine. Same idea. That's the way we can grow as traders. And everybody trades differently, So there's that. And in another couple minutes, I think I'm going to take my own advice about taking care of yourself and go out for a walk and rest my eyes, get some natural light. And don't see any trades on the horizon for me today. I'll leave the book map open, and I'll leave the IRT over here. Nobody needs to, the trigger thing's not going to do anything for anybody. Now, one thing I can do here, I'll switch this back to the lines, not just my trade stuff, the trade signal areas. I'm going to switch this back to the usual. Oh, what am I doing here? Football. I'm going to switch this back to the usual export template. I was able to work out how to do this with just changing this one word right here. And now, you're going to get and now in a minute, the next time it refreshes, these levels will stay in place, but all the rest of the session price levels will print out on the chart. I just removed them to try to strip this down and make it as clean as I could while I was expecting to be anticipating trading. There we go. See how a bunch of stuff all of a sudden started plotting in here? Well, for my old eyes and everything, that's pretty confusing. If I just have the continuation zones, the trigger zones, and the pullback zones, and not all the rest of this stuff, that's easier for me to spot. And these are, as you might have just figured out, the data for this indicator and the data for these cloud notes is just driven prices, the session prices from IRT, with the addition of my continuation, trigger, and pullback zones. And anybody that wants these can use these levels. I start pushing them out Sunday night at 1700 through Friday night at 1600. As long as I have IRT up. Now, Thursday I will not. Friday I probably won't either because I don't like half days in my data. But typically that's how I do it, and I'm perfectly happy to share them, openly and free and no problem at all. Yeah, Ron, that shouldn't have bothered your session prices because this was being pushed in micros, not minis. And I don't push the trade stuff in the mini either. So hopefully you got everything right. Yeah, if not, oops. Naked volume points of control. Yeah. Isn't it fun? Trading is fun. It is fun. It's engaging. It's good for your brain. And I find it, when I first figured out about trading, I thought to myself, I remember very distinctly, this has got to be the best opportunity I've ever seen. And I've had a pretty lucky time in my life. And I still feel that way, but it's one of the toughest to achieve, I got to say. Yeah, when I changed the export in the minis or the micros, that only affects the micro. The mini price levels and session prices and all that stuff should be normal. Now, here, watch this. This is something else to watch, everybody that's using Bookmap. Notice how the trade control panel's on. We can trade. Everybody knows that. I've already done it. Let's look at the minis here and see if the session prices are okay for Ron. Well, there they are. Here are the session prices for Ron. And they are not affected by whatever happened in the micros. But watch this. Notice that the minute I changed instruments, the trade control panel deselected to off, or defaulted to off. So if I look at the minis and then jump back over here to the micros and think, oh boy, it's a trade, and go hitting the hell out of the mouse, I'm going to be pretty disappointed about life, because there's nothing going to happen. So what you have to do every time you move back and forth is reactivate the trade control panel right here. The multi-brackets and all that will stay right in place, but you won't be able to get any, you won't be able to trade. Another one of those advice is based on experience. All right. 12:04. You guys keep the home fires burning here. I'll join the stream by the phone in case some magical crap happens. And yeah, no problem, man. Happy to share them. Man, it's no skin off my nose, you know. I just had to make one Google sheet that thing pushes to, and there you go. So happy to help. Okay, now, oh, you know what I forgot to do? How are you guys dancing with no music? What's the deal here, huh? How could that be going on? I never queued it up this morning. Here's something you might be interested in for whatever reason you might want to know. This is called Epidemic Sound. It's got all these playlists and things, and the ones I typically do, which you'll probably relate to, is some that I thought were interesting to me and a little bit, and not necessarily obnoxious. The reason I had to do this was YouTube is extremely careful about copyright and royalty fees, which is perfectly correct of them to be. And in order to have music on your stream, you need to make sure it is copyright free and all that noise. And all of these things that you see on YouTube, like lo-fi and all those real nice tracks, actually, that say, you know, royalty free, used for your stream, is complete bullshit if you're streaming with YouTube. I tried one of those out. The correct way, they say, to test it is to do a stream a few hours with that music and then the minute it's over, switch it from public, like on the weekend, right, when nobody's around. And then the algorithm goes through and it'll flag a copyright or not. And they all did. So I ended up having to buy this monthly subscription from this outfit. And there's all this music, and I don't listen to, I have no speakers here. So I don't know what this is going on now. And I don't spend all my weekends listening to all this music to pick out new stuff for the stream, which I probably should. But so there's a little tidbit for you. Epidemic Sound was the one I found that seemed to be right. And what you do is in Epidemic Sound, you put the name of your, you can buy different plans, obviously. You put the name of your stream, your channel and stream, and then that is whitelisted by them, so that's how it works. So the story goes, and every once in a while I still get a hit that says it hasn't been taken down, I haven't been penalized, but there was a claim against it, and I dispute them all, and I've never heard anything more about it, but there you go. Oh, look at us go. What did we do? Well, we went down, and what are we doing now? Oh, we're going up. What a coincidence. Isn't that something? And we've just about taken all these, oh boy, yay, it's a short. We just about got them all out, didn't we? The market goes up to go down and goes down to go up. Quote, a lot of smart people. And do you know why that happens? Futures are a zero-sum game. And what in the world does that mean? Well, unlike stock or FX or any of that, futures, what do we call futures? A futures contract. It is a contract between a buyer and a seller. There can be no trade without one of each. For every buyer, there is a seller. For every seller, there is a buyer. For every contract traded, there are one each, buyer and seller. Anytime you hear some genius tell you that the price went down because there's way more sellers than buyers, you know right away he doesn't know his butt from third base. The way the market moves is aggression. If sellers are more aggressive than buyers, they cross the inside market and hit the bid, and down we go. They take out this resting liquidity. Other side of the coin, if market's going to go up, buyers cross the market and take out the resting liquidity and lift the ask, or lift the offer, whichever way you phrase it. That's how the market goes up and down. What does that mean that's more important when it comes to the market goes up to go down and goes down to go up? Well, every time somebody's selling, or let's look at today, every time somebody's buying, somebody's on the other side of every one of those trades buying them. Or the other way around. Market's going up, sorry. Somebody's on the other side of every trade selling them. So somebody's selling. Wait a minute. Who has the money to sell all of this inventory to all these buyers? And then what? And then how is that somebody going to make money? The market goes up to go down and goes down to go up. That's really it. And that's what I believe. Prove me wrong. I'd love to know otherwise. Look at the big... Now, in the biggest grand scheme of things, what does the stock market and by extension the futures market do? It goes from lower left to upper right. It goes up over time. But intraday, in the trading cycle, the market goes up to go down and goes down to go up. Based on what I think is based on the high time frame and their inventory and the business they've got to get done, and all the dorks are the retail guys. And just like on the floor, they used to call them the locals in the paper. They called all the orders that came into the floor paper. So there you go. That's my philosophy there. And now I'm going to go out and scare the cats and scare the animals outdoors. Okay, let's see. We're on Bookmap. Mute the mic here. Musicking. All right, be back in a flash. Well, here we are. Beautiful day out. BPOC migration up here to the 70 handle-ish, 67-ish. Look at this cute little distribution they're putting in up here. Why do you suppose? What is that about? Yeah, well, I hope you are trading your vetted setups, period. Yeah, you too, Dan. Have a good one. And look into TradingView there. I'll bet you can set that up to, I'm not saying that you should trade the setup that I am, but it's a place to start. And that's how I approached it. So, yeah, there you go. Okay, so what the hell's going on? I'm catching up with all my stuff here. Yep. Uh, hmm. I'd say the chances of another trade are slim and none down here. Rod, there's a pretty interesting one. Rod took this one. No, he took this one, I believe. Up to here. That's the difference. That's better management, I think. Let me see if I can pull that up. There you go. Long. Boom. Nice. My, yes. He said. Excuse me. Excuse me. Well, I'll run through the backtest stuff at the top of the hour. And then, do the wrap up at 30 like normal. And we'll watch for those market on close imbalance orders at 1450 and shut this thing off at the cash close, top of the hour. remember that stream every day, every trading day from 0800 in the morning until 1500 in the afternoon. Live trades, live account. Hmm. By the way, the stream is high 1440p high definition. If it's not clear on your side, you can click the gear there in YouTube and have it crystal clear and nice and sharp. I hope that's the idea. It is on my side anyway, when I look at it on my other machines. Okay, so we're going to be around that big, here we are. The world famous power hour. Boy, oh boy. Is it ever. So let's get through some of the back testing and some of the principles here. Let me look at something here first. Hold on. First of all, you need to make sure that you understand, I think anyway, some basic parameters and a lot of misconceptions that are thrown around the internet, YouTube, whatever. For example, win rate of and by itself is completely useless. You can have a 95% win rate, have an upside down risk reward ratio, excuse me, and go broke in 10 trades. It's meaningless by itself. All this clickbait stuff on YouTube and everything, it's just what it is. Now, it's a valid metric for your trading when you take it in conjunction with the others. For example, it's one of the key components of or inputs to the expectancy formula, which is win rate times average winner minus loss rate times average loser. That's the expectancy, and you need to have that over a large enough sample size that it is statistically significant, not 10 trades or this month or something else. So that's important to know, and just keep your head around when you're surfing about. And I guess the next best place to go is how am I approaching trading as a statistical business based on probabilities rather than a video game or gambling or whatever, right? Or YouTube Dream or something. And the way that I have chosen to do that, or that I have determined to be the correct method based on everything I've been able to learn from the best top hedge fund managers and traders in the world, to date anyway, is that the market is random. There's millions of traders making a statement one way or another about this market every minute of every day. To try to predict where that's going doesn't have a positive outcome built in it for you or for me, but rather you identify a setup and specific criteria that presents itself frequently, and you capture a statistically significant data set of that data, that setup, those criteria, and determine mathematically, really, not just I think so, or I guess, or I saw this on YouTube, really mathematically determine whether it has a statistical probability or expectancy or edge, whatever you want to call that. If so, you then trade that every time it presents itself in the live market, and you rely on the law of large numbers, which is a key thing to manifest that percentage edge to your account. That's the way Jim Simmons, Ed Thorpe, Paul Tudor Jones, Ray Dalio, Tom the Trader, Tom Sosnoff, everybody, this, what's his name? This Brightstein, new guy, Josh, whatever his name is, new guy on the scene. Everybody that is a successful trader, it will always, whatever they talk about, will always come back to probability and and the law of probabilities, the law of large numbers, Mark Douglas, any of them. If you don't believe me, check for yourself. It's a long weekend. Knock yourself out. So I have just hooked myself in with that idea, and that's the way I'm going. The trades that I chose, the setups that I recognize and that I chose to vet first were the initial balance trades, which we've talked about a lot. Here's a couple of them taken today. Not managed very well, but taken today. And that's what I backtest. So that's what we're going to look at now is how do you do that? How did I do it anyway? So I've determined that it's the initial balance trade, right? And I know that there are two of those because there's two initial balances every day. There's an IB high and there's an IB low. So I determined some specific rules to start with. You got to start someplace. It's like painting a house. You got to, pick a spot and start painting. Same idea. Suggested to me actually originally by Rod, who's a very successful trader, that he uses a thing he does mentally for his IB failures. So here we go. First, let's get this guy over here out of the way. He said, well, what I do is when price takes out, when I have the IB statistic and it pulls back to a range, say within 3 to 5 points, and then tests back to the IB, I consider that a short. I thought, well, that's a good idea. So I figured out how to code up first with indicators on this chart so that I could manually see, physically see if it was happening where I thought it was. And then I figured out how to do these rules in the backtest system of IRT. If you can code with Python or whatever, knock yourself out. It's really easy. This is easy. With the backtest engine, obviously the computer is going to evaluate all of these rules over every bar that you specify in the backtest. In my case, it's 1 minute candles. So however many days backward we look, the system is going to evaluate every one of these rules over every 1 minute bar. And these rules have to be set up specifically to do exactly whatever it is you want. If you want price to come up and take out this IB high, go down here to within this zone, come back up here to the trigger zone and go short. That's what you've got to have going on over here. Same way with continuation, same way with the IB low. It should be obvious. I hope so. And that's what I've accomplished here. Now you can do a lot of what if stuff. What if I trail up? What if I don't? Whatever. But I started at one place. I started with my basic 2-lot risk neutral trading plan, which is a 3-point stop, a 3-point risk neutral target right over here. Every day I go through this in the pre-market. Oh, risk neutral, 2-lot stop. 2-lot package, 12 ticks stop, which is 3 points. The first risk neutral scale, the first T1 is for half of the package for one contract and for 12 ticks positive. Then there's a runner, the other contract for 48 ticks. That's my basic 2-lot risk neutral package. That's what this trades. Then you can set up your backtest however many days you want. This is the MES. That's what we're trading today. 500 days. This is the commissions, round trips, 2 lots, etc., etc. Okay. There you go. We just backtest 494 trading days, 218,176 1-minute candles. These are the results. This is the micro, right? Took 5 seconds, by the way. And these are this per trade basics. 1,000 trades, 223 wins, 617 lose, 677 losing trades. Oh, this is upside down. This is not the correct. I was doing something different. Yeah, we'll change that in a minute. But you get the idea. Winning trades, losing trades, average winner, average loser. These are things that you can use to calculate your expectancy. Average win-to-loss ratio, 4.17, 32%. And if you want to get real into the weeds, you can look at each and every one of those. Come on. Well, this doesn't want to be nice here today. You can look at each trade going back to wherever we started, January 17th, 24. Look at every trade, every entry, every stop, every profit target, and the profit or the outcome of each one of them. Now I think I know what I was doing here, so let's be sure it's the risk neutral 2-lot package. This is the what if thing. 12 tick stop, 12 tick T1, 48 tick T2, trailers, doot. Okay. Come on. Savvy. Oh boy, this thing doesn't like to be responsive when it's got a lot of stuff going on. Set up back test. I don't quite understand this, but we're going to go with it anyway. There we are. Commissions, profit, gross profit, total profit, net long, net short, 1,000 trades, 535 long, 465 short. Now I created a tool, a couple of them actually, but I created a tool to do individuals like this. So we can use this tool to do individual statistics. And then I'll show you something else I got going on here. 1,000 trades. – 323 winning trades. Average winner 65.10. Total losses. I can't believe total losses is 677. Something seems to be really crazy here. I'm not sure what I've got going on, but let's figure out. And the average loss, $15. Okay. So something's wrong here, and I don't know why. I'll have to figure that out, actually. But this is how it comes out with the scratch, comes out with the win rate, comes out with the loss rate, comes out with the expectancy, R multiple, profit factor, etc. And this is something wrong with my math, with my entries on the in the system at the base level. Okay, so that's how this works. Here's another one that I can show you that this actually does work. These are the back tests that I've done in the last couple of days, 20 of them, starting out with the basic. This is scratch. This is 1-to-1. Here we go. Here is the basic package that we just tested. And here is with this rule change that I made. And with the subsequent rule change, and there you go. 52.47, 15.85 expectancy, 66 R multiple, profit factor 1.7, R risk to reward of 2.13. Trade today is 1.98. We got 8 consecutive wins, 8 consecutive losses. Now here's one I did, this is the way you can do what ifs. And the way you have to do this logically and systematically, you run a back test, you capture the numbers, you make one change. What's this one change? Instead of just the basic package, not touching anything, at 12 ticks, in other words, at T1, I bring the stop to break even, to entry. And then you have those numbers. And that's how it works. That's the way you can compare rationally what you've got going on. And then over here, these are the rule changes. And I have to put in, previously when I started doing this, I was not paying attention to commissions. And I got to thinking, that's really stupid, because commissions can be a huge part of your day. Can be a huge cost, even though it seems cheap, even though it's 23 cents or $1.23 round trip. It can be a big deal. So I've now added these two columns, gross profit and commission, and that will have a big effect over here. And what I mean by that is, there's a $12,000 gross profit, $2,000 commissions on the micros. No, this is over 500 days, right? And this is over several trading years. But still, that's 10%. That's 20% of your 20% of your return is net profit. Your total profit is $12,000. This is over 20%, almost 20% cost, commissions and fees. So there you go. And I've got to figure out what's wrong with that, and I will do so, and I'll report back, as this cannot possibly be the case at all, impossible. And I can tell you why it's not possible. There is a scratch and stops, and these two numbers evaluate exactly to 1,000, which is impossible. So, okay, anyway, you get the point. This is how you backtest. Now, if it sounds familiar, this is also the business model of the gaming industry from the point of view of the casino. Do you want to be the casino, or do you want to be the gambler? So what the casino does They play no game on the casino floor which they have not pre-identified to have a specific edge, whatever that is in percent, and very specific rules. They take the game to the casino floor and they roll it out, and their only mission in life is to play that game as many times as they can. That's why there's no emotions in the dealers or the pit people. They got to know they don't care they win or lose. They don't care how many people win. They don't care how many people lose. Period. They're playing probability. They're only interested in getting as many occurrences as they can, because they know the law of large numbers will manifest that percentage edge to the bottom line of that casino. Simple. Therefore, I suggest that that's the way we should do it, and that's what I'm doing. That's why I vetted this particular setup and everything. And let's see what happened to the market here. It's way off the map. Let's look over here at earlier today. Here's some of the signals. There's the trade that was thrown. It got T1 and it scratched. So that's the one trade the system saw today and took. I took two others differently, because the reason I did that is I've got to get myself more aligned with the trigger themselves. And that's why you see the three trades over here. There's the first one, which was not traded by the system, was a stop in about a blink of an eye. Stop in the blink. Come on now, we don't need to do that. You don't need to play stupid on me here. Okay? Immediate stop. Boom. Initial balance long. Continuation. I'm sorry. Initial balance failure. Continue. And that is reverse, mean reversion, which is in line with what you see here. There's the short. There's the T1. Didn't get to T2. I took it off at T1 to balance out for this loss. Now I'm sitting even, or one tick. Now I wait a while and I get the IB continuation trade. T1, and I got impatient and trailed up too much. Took them both off at T1. That's poor trade management on my part. And here you see T2. And then if you want to get really sick to your stomach, this is the importance of trade management. Here we are now. That's 3 times this total profit target. That's how you let your winners run. And I didn't do it. I have to really work on, that's what I was attempting to do over here and didn't do a good job of it. I have to figure it out. Now I have put those 2 trades in my system, in my size up system right here, these 3 trades right here. So what my plan is as follows. I will trade these micros. First of all, this is based on a 2-lot risk neutral package for both micro and mini. Okay, so I'm going to trade micros until the P&L is equal to 1.3 times the mini full stop, which is 24 ticks in the mini, at the mini. and that turns out to be 319. This is dollar value, of course, because it's 10%, 319 ticks. So here's each trade. Here's all the results of each trade. And here is how many ticks I need to size up. And here's how many trades I need at the average trade, 2-lot risk neutral. How many trades will be required to make this target to size up to a mini. And here are my stats. And these are just to confirm that they're all right with my other journals. 12 days, 21 trades. There's all the specs, percent win rate, percent loss rate, average loss, profit factor, and expectancy. This is how you can keep your numbers and know that you're really trading and know that you're really making progress, which is really important. Treat this like a business. Okay, let's, got any questions? Put them out there. Otherwise, I'm going to step back, and at about the bottom of the hour or so, I'll do the market recap, and then we'll see where we go. And I'm going to try to figure out right now why this back test is not working right. And let's do that together if you want to. I mean, you're welcome to watch. This has got me very disappointed here. I'm thinking I must have made an error when I made some changes, those rule changes that I pointed out over here. These rule changes that I pointed out. And I had to update those as well on the chart in these backtest rules. And I'm wondering if I corrupted one of my actual trading signals by accident. So let's just see. And that's a good thing I should think about. When this is completely done, I need to save this entire definition backed up somehow. I have to look into that. So let's see. Let's see now. Set up the back test. MES, 2-lot. Let's cut this down. Oh, let's take this down to 2 days and see what we get. Okay, so short at 10:02. This is also something you can do, right? So there's our short. What time is it? Oh, come on now. Let me go like this. We can watch the time and the date and all that. Oh, that wasn't nice. There's 10:02. There's a short. 2 contracts. T1 cover 10:03. Cover 10:03. Stop. Minus 12 contracts. Minus 12, I'm sorry. At 10 something or another. What is it? 10:20? Oh, look at there, 10:20. Exactly. Now, the reason for these random profits here and additional money, more than 15, less than 15 and more than 15 are the commissions. So that's plotting exactly right. And it's plotting that trade, the only trade of the day, correctly. Are you still here? Am I by myself? Okay. I'll tell you what I'm going to do now. Let's put this out at 100 days, 50 days. And let's get rid of these commissions. That seems to be, maybe that's screwing something up. I only put this stuff in here last night when I got to thinking, you know, especially with the minis, that's $4.25 a round turn, baby, per contract. Trade every 2 of them is 9, 8.25, 8.5 every contract. That's bigger than the sharp stick in the eye, I'll tell you that right now. Okay, and let's see what happens now. Back to burp. Net profit. Doodly-doo. Do no more commissions. That part's okay. Well, this thing doesn't like to. IRT just doesn't multitask well when it's choking on a lot of data. God damn it. Well, that looks about right. And these numbers look correct, you see. 39-24. 39 wins, 24 losses. 63 from 100. That means we got about 44 scratch. Okay. And we can look at our individual trades and they're going to be okay. Now let's bump it up and hit the 500 mark and see whether it was just those commissions or not. That 667 was mega stupid. Well, that's the same amount we had before, if you recall, but we had a 2,000 something dollar commissions. So that net works out okay. $31.65. That's about now you see what a difference. 230. There we go. So let's get this tool back up, and you can see that I'm not completely crazy. Well, maybe a little crazy, but come on, it's a little crazy among friends. So we got 1,000 trades. We got total trade. Oh, 1,000. That's a problem too. We got 4, I don't know what, something. How many days was it? 494, okay. So we have 494 days. We've got 1,000 trades. We've got 329 wins. Average winner 65.96, okay. And we've got 297 losses at 31.28. Now, this makes a little more sense, perhaps, doesn't it? Okay. We've got 374 scratches. These are ticks, by the way. 51 to 48. Expectancy is 139. Multiples 6. Profit factor, RR. We have package size of 2. That's 2,000 trades or, executions. T1, 703. T2, 329 and 968 stops. Then I could put those numbers, if I chose to, up here. And I would be able to put that in this list of stuff and calculate with everything else and be able to compare them. There you go. All right, I feel better about that. So that's not broken. That's a good thing. And let's save this a couple of dozen times over here. All right, let's go with the world famous recap. Well, here's the day. What is the context if you had to guess? 100% up. Up and to the right. Directional day with 1, 2, 3, 4 little distributions, maybe 5. You call this one of them. Good day to be long. Good day to have been a good trade manager. Left this sit like I usually do, and I would have been able to just keep dragging this up. However, we've talked about trade management a bunch of times, but, could have managed that better, absolutely. But I'm still positive on the day, 26, net 26 up, ticks. Covering a complete loss for 24 ticks. Then this scratch, risk neutral kind of thing. A T1 and then another T1. All right. Not a good showing on my part, but not to do with the system, but to do with me. Yeah. There's the day. There's the yesterday. Today. RTH session, by the way. And this is the micro NASDAQ. What have we done in the high time frame, the micro composite? Well, boomity boomity boom. We've taken back this whole episode day before yesterday, Monday, or Friday. We've taken almost the whole thing back to within a tick or two. Well, what is the high? Look over there look at the info box. The high is 67.91 quarter. The high is 67.84 quarter. So it's 6 handles below. Volume is about normal, maybe even a little bit up for this time of day. %, it says. I don't know what happened to the chart, but there you go. And we're way down to 2 1/4 on the ATR. We already know about the trade. I've gone through that enough times in backtesting, I think, to probably bore everybody to tears. let's look at something besides that. So, investing.com, free. You can filter it any way you want to filter it, your country, what reports you want, everything you need to know about. This was today. Here's tomorrow. GDP, initial jobless claims, core PCE, new home sales. Let's look at the week. Nothing on Thursday, right? Holiday, and Friday, Chicago PMI. Next week, let's talk about that. ISM PMI, non-farm employment change, PMI. Thursday, initial jobless. Friday, the Michigan number, core PCE. Okay, and I don't think we have much to worry about in earnings anymore. Let's see. Next week, Tuesday, we've got Dell and some earnings, and then we've got Wednesday and Thursday. Remember that you can filter this any way you want to, and that this is the free version. I try to always use the free version so anybody can have access to it. We also have financial youth Wales because it has a similar docket over here that I don't like as well as investing.com. I like this is better format for me to copy and paste, makes more sense. Here's tomorrow. And this is more of a squawk box side of life, and we are going to get Sonne Takaichi. And this is where we're going to have our market on close and balance orders are going to show up over here. And they're going to be here in about 8 minutes or 7.5. So I think that's pretty much got the wrap for today. It was a pretty sweet trade day if you were just zoom out. I can't recommend more keeping the entire daily context in view until you need to zoom in to trade. Okay. But could there be any question in your mind which way would be the proper direction to trade today? Even if you're trading a VPOC migration, which I have not been able to do successfully, and we've talked about that plenty, but even if you were trading that, look at this yellow brick road, you know? Hey, there you go. So I'm going to wander around the house and see what kind of trouble I can get into for a minute, and then we will have the market on close and balance at 1450. And we'll shut this hootenanny down at 1500 and be back open tomorrow at 0800. Interest you in some arugula or cold noodles? Mom. Okay. Couple of minutes here. And they continue to chug it up. Oh, that's interesting. Now, if I didn't mention it, which I'm pretty sure I didn't, the 12-to-1 statistic in play today, and it is playing out. And what is that? It is let me type that down here, actually. It is similar to the IB statistic, but what it says is that if the market is out of balance, that's the first important thing. And we put in a new excess between 12 and 1, high or low. Well, we put in a new high between 12 and 1, pretty close here. That there's a 90-something% probability we will exceed that at some point in the balance of the RTH trading session. And here we are. And that's up 17 handles. Now, it's a nice stat compared to the initial balance because in the IB stat, it sets at what time? 9 o'clock in the morning, right? 9:30. So you have essentially 6 hours. This is 2 hours. And there it is. Slick as a whistle right there. So there you go. And we have had the market on close imbalance, and basically nothing happened over here. Yesterday was huge, if you recall. Billions, and billions of contracts. Carl Sagan. We don't have it popped up over here yet, but if and when it does. Yesterday was 2,600,000,000 and some million contracts sell side for the NQ. There you go. 1,124,000,000 buy side S&P. 1,360,000,000 buy side NASDAQ. Oh, isn't it cute? Today is all buy side. Yesterday was all sell side. 588,000,000, 804,000,000, all buy side. Yeah, go figure. Actually, I'm going to make a point of this after this session's over today. I'm going to Google about this damn thing and look into it. It doesn't make any sense to me. 1 billion, a billion contracts. Now it's an imbalance, right? So that means there's 1 billion more buy side contracts or offers made on close than there is sell side. Remember that there can be a hell of a lot more liquidity over here than there is, but it's orders and trades that have to be balanced. And here are those market unbalanced orders. I don't get it. So anyway, that's the market on close. We're going to shut this hootenanny down in about 7.5 minutes. Hope you had a great day trading. I hope you don't let Monkey Boy run away with your mouse. Just think of, just think of it in this whole psychological trading story. There's a lot of, I don't have to tell, if you're listening to this, I don't have to tell you, there's a lot of YouTube and all kind of, stuff about trader psychology, this, and, I'm sure well-intentioned people like Brett Steenbogger and those guys, they all mean well, but remember how they make their living, selling books about trader psychology and giving courses. I really think that if you just approach it, maybe it won't be the cure-all for you, but it will certainly help, I believe. Just approach it, first of all, as I said when I was talking about Monkey Boy, be continually aware of the here and now. Be aware of you. Whoa, what's that big adrenaline rush I just got? Oh, that's FOMO. Get out of here, Monkey Boy. Thank you, though. No, I'm not going to take that trade. You know what I mean? I'm not going to chase. I don't have revenge. This is beautiful, isn't it? For a 12-to-1 stat. Sweet. What if I'd have just held this till the close? Well, what would it be? 730 to 789. 790, 60 points. Okay. Woulda, shoulda, coulda. Anyway, my advice to this whole psychological approach is just step back from all the stuff you read and hear and see, and think about it from a point of view of everything else you do in your life. Are you an adult now? I don't do things I used to do when I was a kid. I don't overtrade. I don't, succumb to FOMO or chasing trades or revenge trading. I don't go to the bathroom in my pants. I used to do that when I was a kid. I don't now. I'm an adult. I think my opinion, just common sense, old cowboy from Montana, and that's the truth. Just look at it from a common sense point of view. What the hell? You're an adult. You're an adult to the point that you've got all these computers. You found out about futures. You're going to try to make a living doing this. Are you telling me that you're not an adult enough to just control yourself at the basic level? I think you can. I have complete faith that you can. Because I know you do it in every other aspect of your life. So it's not a problem. You just do it here too. You do it while you're training also. You're aware and you don't react. Simple. That's my advice. And we're going to shut this baby down in 3.5 minutes. Remember that you are the most critical tool you've got in your shed, in your trading shed. And you need to take care of it, Make sure you're well rested, hydrated, fed, not on emotional tilt. Do some exercises in the morning. A little meditation is great. Do some exercise through the day. Take a couple of breaks in the day. Get outside away from the screens and look down the street. And, peek over the fence at the neighbor gal. Whatever the hell it is, it gives you a soft focus and lets you look off in the distance. Rest those eyes. Change your mind. A big help. You need to be balanced. There needs to be a work-life, trader-life balance for you to be successful. And that's the truth. All right, 3 minutes. Let's see what happens now. And otherwise, have a great one. So this is a great weekend to, we're trading tomorrow, of course, but this is a great weekend or long weekend to figure out a trade that you can vet statistically. If it's nothing more than get yourself a subscription to, TradingView and throw up some indicators like I did on this chart over here and just scroll back through the damn things. Scroll back, just throw some indicators here and scroll back through them. Pick out whichever kind of a thing you want, whatever entry you want. VPOC migration. This is the initial balance trades. There's two. Initial balance continuation, initial balance failure. Burp. Easy. Real simple setup. I'm happy to share them. Here's the initial balance. The continuation zone is 3 points to 5 points above the initial balance high, below the initial balance low. The pullback zone is 3 to 5 points below the initial balance high, above the initial balance low. And the trigger zone is 1 point either side of the IB. Now you got yourself a setup. You have a setup that's been thoroughly vetted by me, has a statistical, it has a positive expectancy, and it has an edge, and it has a positive win rate, and all those things that you care about. And if you set this up, you can simply see, and here are the signals: A, B, C. A, take out the IB statistic. B comes into either the pullback zone or the continuation zone. C, or the trigger, comes to the trigger zone. And there you go. There you go. Merry Christmas. Happy Thanksgiving. There is a trade for you right there. That's been vetted by me. And if you don't believe that, you can look right there. And that's just a few of them. Take a screen snap. Whatever you want to do. And in the meantime, you got 10 seconds to say adios amigos until tomorrow. Hasta mañana. Monos. There we are. Have a great one. Yeah, I think I will too. I'm going to shut this down, and I'll see you all at 8 o'clock in the morning. Smack the thumbs up and subscribe on your way out the door. That's super helpful. I'm really glad that you guys are participating in the chat. That's great. And, because it's a boring, lonely, not boring, but it's a lonesome business. Take care of yourself. Get out and, look down the street, look over the fence, do something. Get some exercise. Balance your life. Take care.